Hey, good morning, everybody. If you are on this side of the world, because we have people on the other side of the world today for this very special episode. We have Venzen on today. As if you guys saw Tone's show yesterday, Tone and Tyler are sitting right next to each other again. So this is just going to be really, really awesome. So, gentlemen, please come on the screen. And Venzen, it is fantastic to see you again. How are you?
I'm fine, thank you, Leah. Thanks for having me. Great to have both you and Tyler on the same show.
Yay, yay. All right. And Tone and Tyler, what kind of mischief have you been up to?
No, I just went to a really great dinner last night. It was very good steak, very good steak here in Chattanooga. So I'm really enjoying it. Finally got some sleep, and it's going to be a great show. Willie's going to be joining us in a few minutes, just running a few minutes late. And I can't wait to dive into this stuff.
Nice. And Tyler, so Tone is a formidable match in chess?
Yeah, absolutely. He's
I got beat though.
No, he's a very good player.
What's this, guys? I didn't hear about this before.
Oh, well, contentious match.
We both love playing chess, and we've never played before. So after a very long dinner and a couple of bottles, we came home and we played a game that went on for about an hour. A lot of fun.
Yeah, no, we pulled out the poker set and the chess set, and I figured I was going to lose the chess game in like 15 to 20 minutes, and we'd still have time for poker. The chess game went on a little too long, so poker is probably going to be tonight.
Nice. If I can nerd out for a second, Venzen, I don't know if you've read this book. I'm going to totally nerd out since I have it right here. I didn't even know. So Edward Thorp just came out with this book, which is A Man for All Markets. Tyler, you probably know who this is. Tone, you definitely do because I geeked out on it before when you were here. He was the original card counter and then taught everybody how to card count in the casinos. And then obviously,
good man.
And then like really, he's known for his simplicity and just teaching everybody his tricks. And then obviously when it became illegal, he was like, all right, well, how do I just figure out mathematically financial markets? And he was the first real quant in finance. And then he's like, all right, well, let's teach everybody again how to.
That's really good. I love the title, Man for All Markets from Las Vegas to Wall Street, Yeah, that's like the Kelly criterion right in there. Yeah. Gambling to trading is a small step for mankind. They are connected and correlated 100%.
Yeah, and just to say the line under it, how I beat the dealer and the market, right? He just goes at it. All right, well, this is gonna be great. Tone.
Hey guys, so let me get the shilling out of the way as we wait for Willie, and then we'll just get Venzen's general thoughts on what he's been up to and stuff. So once again, the Unconfiscatable conference, getting some people, tweeting about it, that they're signing up for the poker game. We currently got 9 seats left. And once these 9 seats are sold, I think we'll be at 85 or 90 out of 100 seats sold. We're going to follow up with a few celebs, and then hopefully we can sell that out. Still waiting on 1 or 2 people to potentially change their mind last minute to be speakers. We're going to get the agenda out this week. And we're doing good. Hey, Leah, are you guys sold out on your workshop yet?
No, actually. Well, so that's good to say. Thank you for letting us do 50. Tyler and I need to do some more shows and chill. But yes, we actually do have about 12 seats right now open. So that'll be good fun. Everybody can jump on.
Okay, great. All right, so there it is. Click on Tyler's picture for Lucid Investment Strategies, and it will take you over to theirs. Jimmy Song's workshop, Programming Blockchain. You can go ahead and click on that, register through his website. And of course, mine, if you click on mine, well, it doesn't take you to a new website, it takes you to our website. London, it said sold out yesterday. We put some more seats up because we haven't even started looking for a venue yet. So I figured we can accommodate everyone. Paris, yep, I'll be in Paris. That one's going to be interesting. And Oh, we can briefly mention it. Like Tyler and I were talking about, people are starting to talk about forcing a bank run in Paris. And what does that mean for Bitcoin? Maybe we can touch upon that in the show. And then we got Phoenix and Las Vegas coming up. And that's it for that part. I will be in Phoenix this upcoming Saturday. Go ahead and sign up for that meetup. This would be Saturday night over in Phoenix, Arizona. And that's pretty much it for my announcements. We can go back to stopping screen share. Still waiting on Willie. So Venzen, what have you been up to, man, since the last time we spoke, or last time I saw you was back in October? How's the subscription site? Oh, let me pull up your site. Hold on. I should have it up. 1 second.
Yeah, if you go to the homepage there, it should have an open. Trade. Trade.cryptocurrency.net. And Tone, what I've been doing.
Yeah.
If anybody can see my face, because I'm near the middle of the night now. What I've been doing since we last met is growing my beard. You see, so now I'm like the Robinson Crusoe of Bitcoin out here. And other than that, there were two main events in the last 3 months since we met, which was a great meeting in Phuket, by the way. I'm wearing the shirt that my tailor made for me. a Nepalese custom fit shirt, you know, for really cheap. And really, it's the first custom shirt I have in my whole life, like tailored shirt. It's great. So that was one benefit. The other thing is that you and Willie were completely right in your estimation that price was going to go down, because I was completely bullish, and I said that price cannot go down because 6,000 was impenetrable. Well, that was a big shock, and me and my followers had to kind of deal with the consequences of that. Of course, once you get a sell signal to the
Oh, we lose him? We lose Venzen. Oh, Willie.
Here he is.
Hey, Willie, you're muted.
You're muted. But hey, Willie.
I cannot mute you, or you can.
Knocking, trying to get in.
Yeah, you came in just as we lost Venzen, unfortunately. Yeah, let's wait for him to come back.
I had to suck on his bandwidth. Or great.
How's it going, Willie? It's good to see you.
Hey, Leah. Great to talk to you first time. Great band.
Hey, Willie.
Yeah.
Oh, where are you these days, man?
I'm in Hong Kong right now. This week I'm in Hong Kong. I was born here. I left at 3. Really liking it. Coming back. Really loving it. It's
very cool. Where in Hong Kong?
I'd want to come back and visit more. Yeah.
What area of Hong Kong are you?
TST, Tsim Sha Tsui. It's the tourist zone. Here. I'm actually in the Mirror Hotel. And I just learnt this tonight, that this is the hotel in which Edward Snowden did all the stuff with the reporter before he went underground. Or
really, that's interesting.
Yeah, it's famous for this. Yeah.
Wow. Is your first language, did you grow up speaking Cantonese?
Yeah, my first language is Cantonese, but it's rusty. Very, very rusty. My vocabulary is equivalent of a 6-year-old.
We got Venzen
so like
back.
when adults have these conversations, I'm like going, I don't know that word. And it's usually stuff that I shouldn't know about when I'm a 6-year-old.
Hey, Wu, how you doing?
Hey, Venzen, great to see you.
Yeah. Fantastic. Guys, I dropped off. Somehow when Wu and I interchanged. Yeah, I dropped off. What was the last thing I was saying, if you need me to recap?
No, you were doing a mea culpa about the 6,000 area, and
Yeah.
and all of a sudden you cut out. So we were wondering what the conclusion was going to be.
Yeah, you were praising Willie and I for what we said, and
Remember that very clearly.
Yeah, I was arguing with you guys day and night, saying, guys, this is going to go up. It cannot go down. And when it went down, you know, my pants dropped off, and my pants dropped off, and me and my camp had to deal with that, you know. So we got a sell signal, and we had to get into the trade late. And since then, the next important thing that's happening is everyone's still there.
Yeah.
I got a note that Zoom closed. Anyway, I'm still on. The next significant thing is now I think we're going up, and we'll discuss this in the course of this show, I guess.
All right, cool. Yeah, no, hey, getting in late on a short trade and making money is not as bad as getting in early on a short trade and getting your account terminated and losing money.
Oh, God.
Don't feel too bad about that.
Very too bad.
Yeah, I do feel bad about that for you, for your sake, because there's an aspect of unfairness about that, Tone. But hey, yeah, you got to roll with the punches, right?
Yeah, exactly. All
Make
right.
lemonade from lemons.
Let's I don't really have an actual planned agenda, so I think let's start with some higher level stuff, and we'll get into the price after. So I'm actually, since Venzen, since you don't publish too many articles these days or videos like you used to, we're gonna go over to Willie, because he did publish something on January 7th, where you talked about the store of value, and you wrote this article on your website called "Utility is a Red Herring. Look for organic store of value." You want to tell us about this?
Yeah, okay. I've got to give a lot of credit to Murad, who you've had on the show previous, because it's really great to bounce off someone who's deep thinking around, and really it's it's great. Reality is, and you can actually do this in equation. It's mathematical proof, right? That utility is MV equals PQ, whatever. This is Chris Beniski was very good at publicizing this equation. It's a very old equation from economists, right? And it's a very first principles equation. It's like it's very, you can't refute it because it's based on common sense. And if you run these equations, the reality is utility value of these networks is very, very low. For example, say Filecoin, cloud storage, if you were to run the numbers on what that network would be worth if it displaced Amazon cloud storage, like to win the entire world's market, it ends up being actually quite mediocre in value using these equations. And so what really drives value into these networks is being a bucket. It's a bucket for storage of value. And what I've come to realize is that all assets in the world, whether it's stocks, which is actually, stocks, gold, metals, commodities, whatever you have there, they are just buckets of storage. Stocks is interesting because they are tagged more to their productivity and their earnings. Things like gold is much more like Bitcoin, where money in equals money out. And so what we're proving here is that we're proving that this crypto network, Bitcoin, is a reliable store of value. And what does a reliable store of value mean? A lot of it comes down to the Lindy effect, that because it's been reliable in the past, because people have believed in it, is reliable into the future. And gold, for example, 6,000 years of history. So this is this. And so what I'm talking about here is like all these crypto networks, they're all going for utility. And ultimately what utility means, it's not a bad thing, is that if you get utility, it's a marketing campaign because people know you. And then they will then park money into you because they've discovered you. But then it's up to you to create a good bucket that does not leak. And an example of this is Ethereum. Great utility. Everyone's creating these ERC20 tokens for whatever reason, whether it's Tether or whether it's some application that's trying to do a phase. But what happened was with Ethereum, you got a lot of people, well, these projects going, oh, okay, we're raising Ethereum. The smart contracts dictate we have to use Ethereum to raise those funds. Now the funds are in Ethereum, and oh, look, everybody else is raising funds in Ethereum. So that's pushing, because all these projects are raising funds in Ethereum and they're keeping it in there because everyone else is keeping it in there. And so Ethereum's price rise was due to people just parking Ethereum because it's going up. It's sure, it's a good store of value. And there's two things to this, is that Ethereum went up because people were parking money in it, and not because they were buying ETH to buy gas to power smart contracts. It's probably 1,000 to 1 ratio of utility to store of value. The problem with Ethereum is it's not a great store of value. It's economic policy.
They don't have one, and they don't know what it's going to be in the future. They're debating it on Reddit.
That's just, you know, for example, it's like, yeah, exactly. And then on top of that, we have our prior history in the DAO. We're going to roll back the economic, what happened, you know. So so what I'm talking about is look for these projects where you have a credible, this is Murad stuff, credible security. My words is don't break on me. Number 2 is don't cheat me, which is credible monetary policy. Number 3 is the network effects, Lindy effect, liquidity, all these things. That's number 3, which is I can get in and I can get out. In my words, it is bring more money in, bring more people in. And the 4th thing, which is, Murad talks about it, this is community, governance, all this stuff. Really, what I'm talking about is number 4 is look after the first prior 3, which are the 3 fundamentals. 3 fundamentals is don't cheat, don't break on me, don't cheat me, and bring more people in.
Right. Well, Ethereum failed on one end too, right? I mean, they grind to a halt when there's too much action. Their devs are sending out tweets saying, "Please stop running smart contracts." You can't run an Ethereum node. I've seen all these articles, people saying, "What do you mean you can't run Ethereum? I'm going to set one up." And then like 3 weeks later, I give up, you know, you get an email. So they failed on 1. They definitely failed on 2 with the DAO rollback and some of the other stuff that, you know, they're eliminating the difficulty bomb, doing whatever they like. And 3 was just a bubble up because of the ICOs. And now that the ICO is running dry, they're in trouble with.
And this is the thing, is that, yes, they created some aspects of store of value through the marketing, but it was not organic. And so it's easy up equals easy down. And it's really important that the stuff is organic. And things like, you know, like say Dash, where you're locking things up and you're paying people to lock things up, that's not organic. Yeah, that's not people like, if you're if you're looking for a bucket, like say you're George Soros and you're just like, I'm going to move from this bucket to this bucket. This bucket's going up and then this bucket's going down. I'm going to move to this bucket. You want the properties in the bucket that ain't going to leak. It's solid. You know that people use this bucket to get in and out. Therefore, I can get out. So yeah, and Bitcoin's. I realize Bitcoin is very organic, is the most organic, most liquid, and that its liquidity is born out of an organicness. The liquidity in a lot of these alternative coins is that they're employing market makers to bootstrap the semblance of liquidity, which is true. And maybe it will bootstrap organic liquidity. So it's not a necessarily stupid play, but the reality is that it's not organic yet. And the question is, maybe the coin goes to shit, maybe the market maker quits, and then you're left high and dry and you can't exit out of your bucket. And that's really important to know that this is organic liquidity. Yeah, so.
All right, cool. Venzen, what are your general thoughts on this? Everything that Willie just said, and Leah, feel free to jump in any time with good questions from the live chat or yourself, and we'll address those as we go.
You know, I love it when Willie talks, Tone, because Willie takes me down rabbit holes and things that I don't know, like Lindy effect and the Mayer multiple and things like that, you know. And then I'm like, what the hell is that? You know, I better study. Can someone throw me the question again? What's our what are we driving at? What's our topic?
Well, just everything that Willie just said in general concept.
So basically, you're saying
okay. You're giving me the floor. You're giving me the floor. My friend Willie and you, Tone, specifically are sort of guiding lights, because, you know, I can't live in an island. I've got a successful trading method that just looks at like so few little technicals, and then I trade that, you know, and I teach people to trade that. So when it comes to fundamental analysis and sentiment analysis and what's happening, what are people actually doing that's being attributed to changes in price? I don't know about those things because I choose to be ignorant. I just look at the chart. I don't read the news. I don't look at Twitter. I don't anything. I go to Twitter to put a song that I like, and then I withdraw, you know. What is very nice for me as well is that Tyler is here, because with Tyler in the house, I feel like I've got a compañero, because now I can speak about the moving averages. And in terms of the moving averages, I looked at Ethereum today with a client. We were consulting for a few hours and we looked at the Ethereum chart because he bought Ethereum at 11 cents or something like that. And he's got a lot of Ethereum and he wants to trade it. And as much as I'm telling him, dude, just sell your Ethereum, buy Bitcoin and get serious. He's like, well, no, I've got all of this value. I insist on trading it in the Ethereum chart. So him and I were looking at Ethereum, and if Tyler will know what I'm talking about, probably everyone on the panel knows what I'm talking about. If you see the moving averages doing this, I'm going to try and show it like this.
Well, Venzen, I'm pulling up the Ethereum chart, and I'm gonna.
Can you throw on some MAs on there? Anything. It doesn't matter which MA. It will all come to the same day.
I'm on a weekly Ethereum chart. Oh, I'm getting
sure.
This is the weekly chart. Not daily.
Please go to the daily. You see, the weekly is bearish. Those
they're all averages. They're totally useless.
Yeah, this is Ethereum, right?
Sort of.
For Ethereum, and if you can zoom out a little bit, I like to see like 1,000 candles. I know you can't zoom out to that extent. Thank you very much. That's great. So you see. You see that the moving averages are all over the place in the daily chart. What we see in the moving averages at the bottom right-hand side, Tyler will confirm, is similar to what we see in the top left of the chart. This, for all we know, is only a correction to the upside. It is not Ethereum in a new bull trend. So while we're talking about Ethereum and its chart, there's no trade evident right there from the moving averages. There's nothing to do. So I don't worry about what's the news about Ethereum, the fact that they now want to go to proof of stake in the future. They're talking about on their GitHub page. Ethereum has, what's this? They did some stupidity recently that was announced. Anybody know about that? I forgot what the news is. Ethereum is doing something. They not only forking, they are doing some stupidity.
Well, Ethereum Classic was just attacked a couple of days ago.
I was gonna talk about that topic next. What do you guys think? Probably you, Venzen, you might not even know, but Ethereum Classic got 51% attack and reworked.
Tone, and after you, Venzen, I do have a question on your piece, Willie. But yeah, keep going.
Okay, so I'm just finding the conversation. This really kind of shocked me. Ethereum is going to ASIC resistance. Are they going to make the protocol ASIC resistant? The mining. Did anybody know about that?
They're not going to do anything. It's just that they have so many. One of the problems with Ethereum is that they have an infinite number of incompetent developers, and when one of them says something, the other 900 are all over. Like, so one incompetent developer says we're going ASIC resistant, and the other one starts writing articles. No, we can't do that. Like, there's absolutely no, like when you go to like their events, you have like thousands of people trying to get in. There's like the Ethereum developer events are like, it's like Comic-Con basically. And
Comic-Con.
Everyone.
Okay. So let me quickly conclude what I'm saying, because I'm going to agree with you. Other than the chart, which shows no trade, it just shows a continuing bear cycle for all we can tell. The fundamentals of Ethereum, and I don't look at them, but today I was forced to look at them. It's really poor. The developers are Ethereum rich. I believe they're being paid in the same token that they're working on. And Ethereum is talking about that they can do smart contracts. But in my understanding, Ethereum cannot do a smart contract. It's something that they're promising for the future, but there's no hope that they will ever achieve it. That's one thing. The other thing is, even if they do achieve smart contracts, you know, like a .com promising that they're going to do X, Y, Z, who wants a smart contract? So who needs it? Has anybody ever asked you for a smart contract?
Yeah. Well, the DAO hacker needed it. So basically, Ethereum has one experience with a true Turing complete smart contract. That was the DAO. After that, they kind of turned off the Turing completeness part internally in order to standardize ERC20. They're not actually smart contracts. Not by
they can't. If they stick with their plan to make a smart contract, they will be hacked forever. If they don't do a smart contract, then what's the point of the network? So it's a losing game holding Ethereum, even if you want to trade it short in the long run, because you're going to end up with a bunch of Ethereum that's worth nothing in relation to the only other valuable thing, which is Bitcoin.
We do need smart contracts. We do. We need logic to convert value.
Willie, respectfully, I don't need a smart contract because who is going to verify the smart contract? I don't trust who is going to verify it.
You're saying that you don't trust it because it's centralized.
Well, you're going to need an oracle to verify the conditions of the smart contract, and then when you have an oracle, it's centralized, and then we back to
no. Yeah. You're talking about oracle interfacing with the real world, but I'm talking about inside a digital. Look, we're moving into a digital age, right? And a lot of the stuff is going to be native within the network, so you don't need the oracle. Arguably, certain things, obviously, you do, but within the world of finance. It's not just dumb value transfer, you know, it's derivatives. If this happens, then that, and you do want to automate these financial contracts. All the world works on these financial contracts. So you do need a way to to be able to do this. The only problem I have with Ethereum
I agree with you.
Very hard. It's very hard to build these financial contracts and know that there's not a bug and someone's going to hack it. And so
this is inevitable. This is inevitable that it will be hacked.
Yeah,
Which
guys,
I've got a 5 minute a 5 minute sort of a proposal to lay on the table if there's time for that. Otherwise, Tone or Tyler or Leah or Willie continue. But in terms of finance and blockchain, there is a very strong contradiction that the two cannot go together. And I can put that on the table, but I think most people are aware of why that's not possible. Blockchain is not the right vehicle for finance.
Well, let me just jump in, Venzen, because of what you said about the moving averages. You look at the Ethereum chart, what I see is the movement of one asset that is completely correlated to another asset. This is Ethereum and its correlation to Bitcoin. And I propose that all projects are correlative to Bitcoin. And what I mean by that is I agree with your conclusion that this chart is not giving you any reason to buy Ethereum at this point, even though those moving averages have turned up. There's so much overhead resistance through those triangles that Tone shows, and we're simply coming up to the bottom of one of those triangles. At that point, I would expect it to roll over. Now, that gets into the question of everything we're talking about, the utility of these other projects. If I am correct, and all projects are correlative to Bitcoin's success, what you would expect to see is in the upswing of Bitcoin back in 2017, that all projects would also swing up. And very probably because of the liquidity problem with them, they would swing up more, because you can do that with an illiquid security or an illiquid project as opposed to a bigger project. But you would also expect the same thing on the downside, which is exactly what we've seen for the past year, where everything goes down at least as much, and in many cases more, than Bitcoin. So to me, when talking about price in this entire spectrum of 4,000 other projects, you must understand what Bitcoin is doing. So you all know that I believe it's going down to 1,000. I didn't believe for a second that it could hold at 6,000 the way Tone and Willy Woo felt. And sometimes we get those things right, sometimes we get them wrong, but that's past history now. We could not hold 6,000. We went down to 3,200. Now the big question is, we have been in an upswing from 3,200 to 4,000 on Bitcoin, and every other project has also gone up with it. Most of them have gone up a lot more than Bitcoin. Ethereum was up 100% with just a 25% move up in Bitcoin. That's what you would expect. So trying to figure out, should we buy Ethereum at this point? Has it bottomed? Is there capitulation? To me, is a useless project, unless you can answer the first question. What is the next move in Bitcoin? Now, Tone believes, and I'll let him speak for himself, that it's got enough momentum to get back up to 5,000 before it fails, and maybe slightly higher. I think it is struggling between 3,800 and 4,200 for just purely technical reasons having to do with what happened when it came up on the other side before it got up to its highs. And therefore, I think the next possible big move is down below 3,000. None of us know that. But what I'm saying is, when trying to discuss what Willie is discussing, about the utility and the Lindy effect on any of these things. The important point is that the longer they are in existence, the greater the probability is they're not going to fail. And this is the perfect example, because Bitcoin was first. It is fundamentally the strongest. It takes care of a lot of things that some of the other projects are trying to do or get better at, but we got to constantly go back to Bitcoin. My feeling is all projects will fail if I am right and Bitcoin goes down to 1,000 except for Bitcoin. And at that point, Bitcoin will have the runway that Willy Woo is looking at in terms of this long-term picture of how is it going to fit in to the financial macroeconomic picture for the next 40 years.
Yeah.
If I can jump in for a second, given what we're talking about, and also Lindy effect, actually Tone is an expert on Mandelbrot, which actually Mandelbrot talked about the Lindy effect as well. My question is for you, Willie, because actually Tone and actually Tyler and I speak about something that's quite contrarian to your piece. So if you don't mind me being obnoxious on the show really quickly. So we distrust exchanges, and we talk about it quite often, given their hacks, given the fact that for the most part, just we don't believe in a lot of the data that's produced in the space. So regarding what you're saying, if I understand correctly, liquidity, and that Bitcoin has the most liquidity, and especially important to speculators and traders, which we are on this show. And given the light, it being prescient right after proof of keys, right? That at least Tone, Tyler, and I were talking about proof of keys. There was obviously, it was the fear that these exchanges were not liquid, and the desire to try to prove potentially that they weren't through, a bank run on these exchanges. So kind of specific to that, what did you think of the proof of keys event or the thoughts behind it relative to your piece? And also, Venzen, we covered it in the morning brief yesterday. I think regarding Ethereum, potentially was the programmable proof of work until they moved to the proof of stake. We lost Willie. And all that fraud.
I got him. I thought he was staying incredibly still for a while, but then I realized that.
It's meditative. Willie, did you understand my question?
Sorry, I blanked out for 2 minutes. I had to switch internet connections. I was on 4G and it was blanking out. So
no problem.
Yeah, sorry.
No problem. So just regarding what you're talking about with liquidity specific for Bitcoin, and that if I understand correctly, that it's such a good speculative instrument, especially for investors, given its liquidity. And then we can take that, as Venzen was talking about, other speculative instruments and derivatives, et cetera. But, in light of the fact that I was very excited personally about the proof of keys event, not just from a values perspective, but that Tyler and I actually believe that these exchanges can't be trusted for their data for the most part. What is your thought regarding, I guess, kind of, you could talk about proof of keys or just our contrarian view relative to your piece?
Sorry, I missed that last bit.
We think exchanges aren't liquid, and therefore we can't trust the data. Tyler and I believe. Tyler, jump in if I'm wrong all the time. Why is it that you believe that we can trust the data in the space, and therefore?
No. There is a very specific difference. The data I'm using is blockchain data. I do not trust exchange data. In fact, I've got a chart that shows what the exchanges are doing versus what's happening on the blockchain. And what's really interesting is in 2017, because we had this very nice, for like 8-9 years, nice organic correlation. Okay, when blockchain volume goes up, it was because of volatility.
Hey, which chart?
Oh, it's not public. It's just an experimental chart.
Killing us.
Cool.
More non-public charts than public charts.
I've got a whole bunch of charts which I don't publish because different reasons, right? But because I'm still thinking about it. But you can imagine a chart where you go wiggle, 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 and wiggle, wiggle, wiggle is volatility, and then wiggle, 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 exactly the same, is on-chain volume. Why? Because it's a speculative instrument. When there's volatility, we send money into the exchanges to trade, right? The interesting thing is wiggle, wiggle, wiggle on exchange track that, right? As it should. But all of 2017, it did not track that. Suddenly it deviated. What that's telling me is that there's a lot of shenanigans going on, and there's another animal that's arrived on the scene, which is playing the exchange games, this tactical trader games. You know, like, come on, Venzen, you guys know that if you're a real player on the exchanges, you want to get enough ammo to push the stuff around. You look at Bitfinex, look at these huge moves, these whales around pushing past the stops. They're milking the stops, right? So there's all the stuff happening, and there's all manner of tactical things you can do to milk money over the short term over the stuff. So what I'm saying is that I do not trust that data. It's all over the place based on tactical games. But ultimately, that stuff, you can go up, down, whatever, but you've got to come back to the fundamentals. You can go, sure, you can go to 20,000 Bitcoins, but $20,000 per Bitcoin, but the fundamentals based on the blockchain movement of real, you know, it's kind of like the Warren Buffetts of this world. Oh yeah, this is value, I'm going in. This is not value, I'm selling. And ultimately, all these trader games, all the hype and the stuff has to come back to this, because this stuff has to clear onto the blockchain. For whatever happens on the exchanges, whether it's like the exchange is front running us, whether it's a whale trading the stuff, milking stops, ultimately this is short-term activity. And if you want to look at long-term price, you look on the blockchain and you look at the real volume of the real Warren Buffetts that are moving in and out.
Interesting. Very interesting. So Bitcoinist, everybody loves talking that institutional investors are going to jump in. The BACT is supposed to, you know, come into fruition at the end of the month. I don't believe it at all. Hopefully later in 2019. Yeah. Maybe just a question back to you and also Venzen. When do you think that, you know, the space will make enough sense from the fundamentals perspective for institutional investors just regarding risk reward, you know, besides volatility chasers, that the space will just make enough sense that it won't be so risky from, as we're talking about right now, that the exchange data isn't to be trusted, which I think is potentially the most dangerous fundamental possible for institutional investors in those, you know, other whales that we would see in the markets that would bump up the liquidity, to want to jump in.
Are you asking me? Who's next?
Either or. You go, Venzen. Go.
I think Willie said it all, you know, in terms of the what's happening in the exchanges, what's happening on the blockchain. There are different data sets there. As for the exchanges, I know I'm not, I know this is consensus knowledge. The exchanges are crooks. They are cowboys. They are cowboys. They trade their own order book. I see it. I see it myself. You can watch on BitMEX. I got on that screen. I got OKX on this screen. Who the hell places orders for 3 contracts up and down the order book for thousands of dollars at every 10 cents? That is not a normal person. That's the exchange doing that. Right, and then when price gets volatile, they all increase to 30 cents miraculously up and down the order book. That's an algorithm running inside of the exchange. So, what are you saying?
To this point, and I will not tell you which exchange, but someone in in the exchange said, oh, the Bitcoin price is going to do this on this date. And then someone said, shh, that's private. You shouldn't. And that tells me that exchanges.
Don't. Yeah, it's like, don't say that.
You don't say that because I believe through this and a whole lot of stuff I'm seeing is that, yeah, I'm with you, Venzen. It's like there is a network of all of the exchanges in cahoots with each other, and it's very, very profitable to control this market. We know that if you have 10% of the daily volume within any market, you become a player and you get to shape that market. Market makers need 10% of the volume, daily volume, to be able to influence the market. Now, if you're an exchange, you've certainly got that. And you've certainly got.
So you know what I'm gonna do next, Willie? I'm gonna moderate what I'm saying because there's also the case to be made. Everyone's still with me? I got a flash that my internet connection is not good. Everyone still hear me?
Yeah.
You're good.
Yep.
Okay. So I'm gonna moderate what I'm saying. Even though the exchanges are crooks and no goods and flounderers and bad guys in this space, right? And in cahoots with each other, they have Telegram groups and they have Zoom meetings, just like.
And now they have Liquid and sidechain.
Yeah, there are two things. Thanks for mentioning that. The first thing on a positive note is that I do not believe that fundamentals or news or the exchanges shape the chart. I believe that the chart is the result of the collective psychology. And if we analyze the Bitcoin chart, and you know, I'm an Elliott Wave-tician, you know, as whether that's credible or makes me incredible, I don't know. The ratio between the price movements, the ratio of the retracements from the beginning of Bitcoin.
If you can actually profit from trading Elliott waves, in my mind, that does make you incredible.
I was waiting for Tone to come with something. So Tone, you know what? Elliott Wave, that's beautiful. You know, it's not about trading Elliott waves. It's about hindsight with Elliott waves. You cannot trade Elliott wave because you're going to say, well, next is wave 100, and then it's gonna kick you in the backside, right? Elliott wave is all about hindsight, and if you do retrospective analysis on the Bitcoin price chart, it just fits the classic Elliott wave model. The waves move by Fibonacci ratios as they should. They retrace by the expected amounts, whether it's wave 1 or wave 4, or you get triangles in wave 4 and so on. It's all textbook Elliott wave stuff, corroborated with empirical data of 100,000 charts going back to the beginning of markets, right? Elliott Wave International has done the work. Ralph Elliott discovered this principle in the markets, and Bitcoin fits with it. So I have to report that everything in the Bitcoin market is organic, whether there are people twisting elbows and manipulating price, it still unfolds according to a grander pattern. So in that sense, I'm comfortable to trade it, because also technically, when you get a buy signal, it plays out every time. You know, well, 7 times out of 10, which is great. If it was 6 times out of 10, that'll still be great. The technical signals are always, are more often than not correct, manipulation or not. So that's my first point, that it doesn't mean that the exchanges being bad guys makes this chart a dark pool of incest and collusion, right? That's one thing. The second thing is, I would love to ask my friend Adam Back why the hell they invented Liquid to help these guys with their damn collusion. Why? You see? Maybe is Blockstream getting a fee for providing Liquid? Is this what's going on? Are they getting a commission for helping these guys to coordinate their their price charts?
I don't think so. I don't
Tone,
think.
can I just add one more point? One more point, and include that is if BitMEX is giving me 100 times leverage or 20 times leverage on a bet worth my margin 1,000 Bitcoins, right? And they're giving me 50x on that. Have they got the liquidity in their wallet to actually pay that out? What if 1,000 people did that? I don't believe they do. These guys are running fractional reserves, and that's why I call them bad guys. Until they can prove that they are not, we as trustless Bitcoinistas demand proof. And so I will call them bad guys until they prove otherwise. You see my point about liquidity of leverage?
Yeah, I get it. I asked the same question. I really did.
Thanks, gentlemen. That makes sense.
We didn't answer your question there.
Tone, you were going to say something. You were on fire. I was waiting for it. Yeah.
I think that liquid is a good thing, and I don't think Blockstream profits from it directly, other than maybe consulting fees on having people understand how to properly use it. And I think Liquid does a couple of things. I think Liquid allows these exchanges to share their liquidity, and exchanges that participate in Liquid, I think, will have a harder time hiding their shenanigans because you can see probably within the Liquid system, one exchange grabbing liquidity from another. And if there's an exchange in Liquid that constantly pulls liquidity but never gives it, you can kind of say, hey, like, what's going on there? And I think the biggest thing that an exchange can benefit from by being on Liquid is it's supposed to prevent like a bank run on a single exchange. Now, and by bank run, I mean like I don't mean like people withdrawing Bitcoin from that exchange. I mean more like, hey, the order book on this exchange is thin. If I can blow through that order book with $1 million, I can cause one exchange to go haywire, causing other exchanges to follow suit. It makes it a lot harder to skew one single exchange. So
like we're all talking about traders here, but like the guys at Core, they've got to think about a network, and it's a whole different constraint. The reality is that the base chain is getting overloaded, and any way you can offload traffic onto another layer. And reality is that there's a lot of traffic going on between exchange to exchange. So let's just put them onto a side chain and not screw up the traffic and congestion on the main chain. I think that's the core reason.
That you guys both make very good responses, my friends. I'm gonna counter, and I don't want to be too strong because it's there's no point in going crazy, with the accusations. Tone, one thing is that I have considered running a Liquid node so that I can watch the shenanigans on there, right? Then on the first page in the second paragraph of Blockstreams, I'm not trying to demonize Blockstream. Those guys are my friends. I speak with them. I've been friends with them before they were Blockstream. I understand the personalities involved, and I don't think Blockstream is an evil in the space. But what they have running on Liquid is also a confidential transactions mechanism, whereby these exchanges can do things and nobody can know between who. You can see the value, but you cannot see between who. So that is not transparent enough for me. Number one, as a Bitcoin user, I demand transparency, right? But for how long? Because I don't like to be transparent. I'm using Bitcoin because I don't like to be transparent to government. Number one. Number two, Willie, as you say, we need to unload things off of the main chain for the sake of scaling and freeing up resources. In a bear market, in history, the transaction fees always go down until they reach about zero at the end of the bear market. And we are in a bear market, and I don't know who can tell them, but we're going to be in a bear market for at least a few months or a few years more. This much is evident from the the moving averages. You know, it's not a secret. So why don't the exchanges use Lightning Network and promote that scaling solution rather than Liquid? I'm not demonizing. I'm not trying to like corner anything. I'm just saying.
Oh, no, Venzen, there's a simple answer to that. Lightning is production ready now, and Liquid isn't.
You're saying Liquid is production ready, Lightning isn't? Yeah.
Yeah. So that's what I meant.
Yeah. Sure. Yeah, I won't press the issue anymore.
Well, let me jump in for a second to try to tie some things together, because I'm really intrigued with what Willie pulled up, that chart, or maybe it was Tone, on some of Willie's work showing adoption curve over a long period of time, which got into some of these esoteric things like Lindy. But what we're talking about now, I'm a little bit embarrassed about the fact that I am such a strong believer in Bitcoin's future, but at the same time, I'm arguing for the centralization of regulators. And what I mean by that is it's taken too long for the regulators to identify the ICO projects for what they are. And they still haven't done anything about it, but they're beginning to. They're beginning to go after exchanges that are allowing US citizens to trade illegal securities on their exchanges. But that's nascent. It's just beginning. But is necessary. The other thing, this discussion about exchanges for crypto, they're all unregulated. And that means that they can do anything they want until they're caught in some kind of a legal trap. And, I talk about Tether, that we simply don't know. And it's the knowing that's important. And one of the things regulators, although it's a centralized function, are able to achieve is they are able to force transparency. So until we get Fidelity, and a company like Fidelity that is willing to be fully regulated to be the central exchange for all of these movements, where everybody knows on a monthly basis what the audit is showing in terms of what's really behind it, and front running in other games will still go on, but 1/100th of what they do in the current space. So the question has always been for me, how do we get something like Bitcoin that is totally decentralized away from all the centralized projects using centralization, such as regulation of exchanges and the regulation of who can be allowed to trade these things? I don't know what the answer is to that.
I could talk to this. Is that, first off, I really agree with you. Essentially, what's happening in the crypto space is really no different. It's history repeating itself since the 1900s. If the required reading is Reminiscences of a Stock Operator, and when I read that first time, I was like, holy moly. This is crypto all over again, but in the stock markets. And then all the stuff happened and regulation happens. Because, when you've got free markets, like free markets is great. It allows a whole system to self-regulate or demand supply. You do not need central planning like a communist regime or a dictatorship. It allows that. And then on top of that, you have this whole ability for people to scam and create a lot of money for themselves. And we saw this in crypto, and what the the medicine for that was very strong institutions that are very centralized, and the SEC and all the stuff, which I'm not against, because I've seen them act very, very, very prudently, and they're under-resourced. They hit things, they signal, they move slowly and methodically, so they're signaling to everybody, and they're doing really smart moves. And the question is, how do you decentralize that? And I'm wondering about this as I'm seeing Ryan Salkis with Masari, who are doing this sort of, we're researching this stuff, we're publishing it, and now if you want to be on the good books, you want to prove your transparency, come on board and declare. So in this way, it's our industry has the option to become transparent and signal to the market that we have integrity, and which is a really nice, I think this may be a way of doing it.
Nice one, Wu. Nice
yeah.
one. Yeah.
Yeah.
Can I quickly jump in and then you and Tyler come back on? I've got no magnanimous point to make, because I can see Tone sitting there watching the conversation we're having. You know what Tone's answer is going to be, right? So I just want to say this is not my bean sprout original idea. Tone is already thinking this. The thing that we have to differentiate with Bitcoin is the difference between the protocol being decentralized on the one side and the price speculation on the other hand. These are different things. Because the protocol is decentralized doesn't mean that the price speculation scene needs to be decentralized. It should be centralized. If I trade on OKX or whichever platform I prefer, I want somebody to be watching them and for somebody to spank their behind when they do naughty things, right? So, Tone, you were going to say this anyway.
Yeah. I mean, I've been saying this for a long time, so I'm sure everyone that's been watching this has heard me talk about this. And I'm with you, Venzen. I don't like the fact that the liquid sidechain is giving you confidential transactions between exchanges. I think that's not what I want to see either. I want to see privacy for the individual. I don't necessarily want to see privacy at an institutional level. At an institutional level, I want to see transparency. At the government level, I want to see transparency. At a citizen level, I want to see confidentiality. So that's probably not the best thing out there.
Wow.
Hey, I don't this conversation along. We got lots of Willy charts to talk about, and most importantly, where Bitcoin's going. I want to throw it back to Leah to see if there's any good questions before we head that way.
All the questions have been more related to government illegality and all things related to the SEC being terrible. So that's not quite related to price. So maybe, Tone, I'm going to throw back a question your way, and it'll be financial markets. Specifically, when Goldman Sachs set up their OTC desk, there's been a lot of OTC desks regarding institutional investors, though.
I think there's been a lot of talk about OTC desks. I don't think there are any in the real institutional side, but that's just my opinion.
Okay, no worries. I was just wondering how. Okay, so then what's your question? I'll throw it to you. There has been no questions from the live chat yet.
I mean, there was that one question you put it in the chat about the node.
Sure. So it's government. But the question was, what would be the best alternative if the government makes illegal to run a BTC node, a Bitcoin node?
See, the problem with making that illegal is I have no clue how they're going to enforce that illegality, right? Look, the government can make it illegal to pay anyone with a $10,000 check. And that is very easily enforceable because the banks will enforce that on behalf of the government, right? So there are ways to enforce it. Like the government can enforce a speed limit if they want to, right? I mean, they can just put speed cameras on every single highway, and then it'll be, the government will know anytime you're speeding. So there are laws that are like 99% enforceable. How do you enforce a person's inability to grow a marijuana plant in their house? I don't know, right? So this is similar to that effect. Like, how do you enforce someone not to run a Bitcoin node? And the thing is that in order for that, even if they could enforce that, that regulation has to be global, and it's not going to be global, right? So even if the country of the U.S. Enforces found a way to enforce that you can't run a node, it'll hurt, but we'll still have a bunch of nodes. Americans have resources that they'll gladly run a node outside the border, and not to mention that everybody else can run a node outside the border, right? So even if that law is enforceable, which it's not going to stop Bitcoin. We have nodes running in space now thanks to Blockstream. So I don't think it's something to worry about. And I do think the government is starting to get a little more conscious about making laws that aren't enforceable. I think they have learned a little bit from the whole marijuana disaster, hopefully.
Yeah, if I can jump in, Willie, go ahead.
To this point, we are lucky that the internet was designed in such a way that it was actually decentralized, and the remnants of that, which is still very strong, is that it's very hard to stop someone running some software. Okay, you trace IP addresses, sure, you can use VPNs. The internet is immutable. If you're in China and there's a Great Firewall of China, you still punch through because the architecture of the internet still remains, which is very, very decentralized. And so, okay, it's illegal. You're never going to find me. I'm going to run the software anyway.
Yeah, it depends on one's OPSEC. It depends on your ability to cover your digital tracks and to disguise them and to obscure them. So for instance,
and if you're going to run a node, you know that stuff because you're technical to start with.
You know this stuff already. I mean, so just average Joe running a node because he wants to, and then suddenly he finds that Comcast has blocked the port. He's going to do some internet searching and learn that he can change the port, right? But most of us who are technical enough to run nodes, we already know about this issue. So we engage at quite a deep OPSEC level already. The other thing is, to Tone's point, Tone is absolutely correct. As soon as government clamps down on something, it increases interest in that very same thing and hikes the price. Marijuana and the prohibition of alcohol and so forth and so forth. And Bitcoin has got so many people working on so many different things. I remember about 3 years ago, I was working with a Bitcoin developer testing some code he wrote to make Bitcoin node connections to each other encrypted. And I was testing this new encryption algorithm. And then nothing happened since because there's no need for it. Everything's still fine. But boy, when the day comes, I know which code I need to implement on my node to make encrypted connections. That's one thing. The other thing is your internet connection. Your ISP needs a license from government for them to run a business and provide internet. So that kind of introduces some centralization. The government gets its okay from ICANN, which is based in the US. So we're dealing with the largest superpower again, controlling the internet and its business and its business providers. That's okay, because as Tone pointed out, Blockstream has now put a satellite, and you guys already have it in the US and Europe. You and me now, Willie, have a satellite passing overhead consistently so that we can receive blockchain information and send transactions via radio, via the Bitcoin fiber network, and so we don't need the internet. Thank you, Blockstream. Thank you, Blockstream. They are doing this for free for us. We've got an alternative to the internet, and the case with with Bitcoin now is that should there be an international lockdown of the internet or a large power failure across many countries, those satellites will still provide us with blockchain. No other currency or no other altcoin can do that. That's why I like Bitcoin.
I want to jump in real quick, and I know this is going to start off like a giant debate. I just want to say it, and then I'll move on and maybe cover it in a future episode. So for all those people that continue to say there's room for multiple blockchains, which I've been saying from the beginning, not going to happen. I always go back to there's only one internet. And we can look at China and even North Korea that are doing everything they can to like have full control of the internet. And here's what they're not stupid. And I think it's kind of dumb to prevent their people from having, freer global access for information. And I think it's dumb to, force their people to only use like their companies, like blocking all of the other global companies. And having said that, they're not that dumb to say, we're going to completely not touch the actual internet and we're going to build our own internet internally. Like they're doing everything they can to have that great firewall that they know has a bunch of holes in it, than attempting to build a new one. Even North Korea isn't building their own internet. They're still on the regular internet with even a bigger wall pretty much, because I heard a couple of stories from people that ended up going to North Korea officially on business. And if you're a foreigner officially on business in North Korea, you have like probably the greatest access in the world to the internet, because when you're a foreigner in North Korea on business, they give you complete access to the world internet with zero restrictions, which you don't
Welcome to North Korea.
I want to talk to this, Tone. There's a big fallacy here. Everyone thinks Bitcoin's a protocol, Ethereum's a protocol. I tell you, it is not a protocol. It is not, right? It is
Clarify, please.
It's a pseudo protocol, yes, mixed with the equivalent of in the tech world, it's a merger between a language and a protocol. And so this stuff, it's like, okay, I need to get this shit done. Okay, Bitcoin's the thing to do. Ethereum's the thing to do. You pick the language to get your stuff done. And it is not primitive enough. It's not basic enough. And the only thing I see that is protocol like TCP/IP is Lightning Network, which all of these blockchains can interface into. So the purpose of each individual blockchain is the ability as these buckets to store value, whether they market themselves like Ethereum, because we got utility and then you're in it, they've got all these things. And so say I want to do some sort of ICO, I'm going to use Ethereum. That is the language for me to program my smart contracts to raise funds. If I want to do value transfer, I want liquidity, maybe I will build my venture on Bitcoin. And it's just like, if you're building any kind of startup, you pick your stack, whether it's PHP for Facebook, whether it's Ruby on Rails for Twitter, you build the stack and then you move and you develop your own stack. Everyone's like trying to build this thing. It's like, oh, we're going to build this platform. It's actually a language. And we're going to attract all these people to build on our language. The reality is these people come in and say it goes to 1 billion people on this platform in some future hypothetical future. The reality is they're going to then go, yeah, this isn't going to suit us. We're going to build our own platform. We're going to create our own language. And you can see this with Apple. Apple, Google, they're all spinning off their own languages. Therefore, they're creating their own protocols. If Facebook comes in, what? They're going to build their own blockchain. All the stuff. So ultimately, the fundamental protocol is something really basic. And I think it's Lightning Network.
Willie, if you guys don't mind me jumping in, we have like 20 good questions at this point on Bitcoin price, which is awesome. And people are asking you definitely to discuss NVT. And the question is, the NVT chart is not showing a bottom yet. Why would that be?
Because we're not at the
Willie,
bottom.
wait. Before you answer, what chart am I clicking on, Willie?
The top one, where your cursor is, go closest to it, NVT ratio.
And just what you're seeing.
Click it. Okay. All right. First thing to note is that I've revised it. We're on a logarithmic chart now. Because powers of 10. Second thing I revised is we're not doing moving averages. I'm using median. Median throws out the outliers like Binance moving cold storage. It's an outlier. It's huge volumes, but we go to the median, which is the middle ground. So those outliers get filtered out. So this is the new chart.
There's something else on this chart that blew our mind, me and Venzen and I, about 2-3 hours ago before we started this podcast. You have pre-2010 data.
Yeah. Yeah, it's a bit of Indiana Jones, right? It's data archaeology. So I just went back and I was like, okay, let's go back to the early days when it was priced in electricity, and we have all that data using the Wayward Back time machine, and then pulling in, there were 2 exchanges prior to Mt. Gox. One of them we have data for, the other one gone, right? So we bring that in, and so it's a reconstruction of the price. And so I did all that work and then spliced it into the live charts, because it's really important for these long studies, like you need, those early days are really important to guarantee that trend is intact. So yeah, I did that work too. I've been meaning to do that for a while. So yeah.
Guys, Willie, can I thank you, Willie, for doing that? Because once I get a hold of that data, I'm going to be analyzing that, and
Elliott Wave. Yes, I hear you.
yeah. I'm really. I mean, this is amazing because I'm putting my cursor there, like you guys can see it. You cannot. Where I started analyzing from is what we see in Tone's Bitcoin Liquid Index, which is not the beginning of price. And what comes before is very, very critical. That's going to be amazing to analyze. The other thing, Tone, can I ask you to go back to that NVT for a brief minute? Do you guys remember I was
just going to the early BLX data, but yes. I know, yeah. Because
you see where it starts. Yeah. Where it starts is in the middle of nowhere.
July 2010.
Yeah, it starts with Mt. Gox data in the middle of a correction, and as Elliott Wave analysts, we're like, what the hell? How do you interpret that? A chart starts in a correction, whereas there you can see it starts very crisply and very neatly as you'd expect it to start. Bang, 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 up to that point. So Willie, man, thank you very much. You're a champ.
It's very interesting because I see this thing, and then there's these exchanges that are happening, 2 exchanges before Mt. Gox, and then suddenly Mt. Gox goes online, and what I see is the price just rocketed up. And then and the interesting thing for me is that when Mt. Gox had competition, I think it was Bitstamp. Other people might know this better than me, but like when Bitstamp came online, the valuations became much more organic. And so when I look at the Mt. Gox phase, there was a lot of shenanigans going on. I think that they pushed the price high and they started to control the price. So you take that into account when you do your Elliott Wave, is that I think there's a real distortion over the Mt. Gox phase.
You know what, Willie, I wish I could confirm what you're saying, but it is classic Elliott Wave stuff, man. That is a wave one pushing That's a wave one pushing up with the energy that comes with the new innovation, you know. But let me analyze it. You might have a point. As for organic, not organic, I'm not sure about this, because I'm with Ernest Hemingway in this regard. You know, Ernest Hemingway is like, it's not about true or not true. It's not about the thing being true or not true. Hemingway is like, it's all true. You know, in an almost relativistic sense, everything is true. It's all contributing to the big picture.
I can see that. I agree. I agree. Like whatever happens there impacts confidence, and that changes the fundamental of real people doing it.
Yeah, it just somehow all plays into the grander scheme of things, which I would like to pull everyone's eyes to the right-hand side of this chart. And you see there's a horizontal red line. I don't know if everyone can see it on the chart. That is the introduction of liquid. And to my own defense, remember I was saying that, yeah, sorry, I said horizontal, vertical red line. It's got a label, liquid launch. And I was saying that that moment there is when we were in Phuket. We three were in Phuket, and I was saying, guys, this cannot go below 6,000 because these exchanges cannot pay out. And look what happens. The moment that liquid gets introduced, price goes down, the NVT goes down, and we have a 50% drop, because suddenly the liquidity is there for them to make good on the shorts that everybody wanted. Amazing.
I don't know about that. I don't know about that.
I'm not saying I've got proof. I'm just saying, look at it. I was saying it can't go down. It doesn't want to go down. And then liquid gets introduced and it immediately goes down. It was about 3 days later.
That's interesting.
Anyway, small point. No big deal.
John, question while we have this chart up too, and regarding selling. Someone asked, is it possible the low volume we're seeing right now is a sign of sellers being exhausted?
Are we really seeing lower volume? I mean, I didn't look at Bitcoin, but when we were looking at Ethereum earlier, here's Ethereum versus USD, and it looks like the volume is way higher on Ethereum versus USD. So I have to assume the volume is is not doing that bad on Bitcoin, relatively speaking to 6 months ago. So it really depends on what your volume comparison is. I guess the best one to use is, somebody gave me like a volume index that I already forgot what it was. So if I look at, I mean, again, here is Bitstamp, right? Bitstamp weekly volume. And I wouldn't say the volume is low. We were at a much lower volume right before the big dump. And this goes against what Venzen was saying. I just don't see how there were that many shorts that profited because look how the volume basically had dried up going into the
I'd say this is different volume though. This is on exchange volume versus MVT volume, which is on chain, which is real.
Correct. This is the on the exchange volume. But for your NVT, maybe I had my question before we get to that. What were your thoughts on this late 2011 NVT?
You got me. I don't know. I don't know what the hell. There's something happened. Before I know, it's a bunch of venture capitalists in Silicon Valley just going, okay, check this out. I'm going to send my wallet to your wallet. Let's just play around, and a few millions of dollars back in that age. A lot.
Maybe another explanation is that is the largest downward correction that Bitcoin had up to that time, and people were just devastated. There was the possibility that it was all over, and then maybe on-chain volume just dropped.
You know what? If you look at that, it is actually the smartest time to get in. Look at you. Go back to that chart. It was like. That was the time. There was someone, I don't think it was Roger Ver because he was earlier, but there's some hidden whale that says now's the time. He's probably someone richer than Roger Ver that's got a lot of Bitcoin right now.
Tyler, I want to have you jump into this. Generally, what are your thoughts about, as a follow-up to what everybody's talking about?
Well, I look at some of the technicals different than everyone else using Hyperwave. And I think what Venzen possibly missed at the end of that long run at 6,000 was the fact that we had this phase 2 of a Hyperwave moving up at $80 per week for the previous year almost. And it came together right at the point at which either 6,000 was going to hold price and move sharply up above 7,500, which then would have changed the whole picture, or it was not going to be able to hold and we would begin the last leg down. And that coincidentally or not coincidentally happened precisely at the same moment. We broke down through 6,000 and 5,800 exactly the week that that the phase 2 on the Hyperwave arrived at that same point. And that was the end of it from my perspective.
Tyler, as a follow-up.
Tyler, you're absolutely correct. You're correct, because I noticed after the drop, when I was drying up my tears and stopping my shaking, knocking knees, that there was a trend line. There's a trend line from, I believe, the 2011 lows that hits the bottom of the 2015 lows and goes right through that point where price dropped through. That's the phase 2 line I think you're talking about. Maybe I'm exaggerating with the 2011 part, but definitely from 2015, there was a line that went right just through that little angle that price made down. Correct.
It's awfully funny how.
Thanks for saying. You're right.
Well, it's awfully funny how a number of things come together at the same points. And if you fix on one or two of them that you've been following closely, all of a sudden you get blindsided by a third or a fourth that you've missed.
Yeah.
We all go through that, you know.
Yeah. Repeatedly.
Hey, Willie.
Sorry.
Oh no, go ahead. I got a question after. Go for it.
I was a sidetrack. It was like I got to meet the Adam Robinson, who is really interesting. He's a macro guy. He advises the top hedge funds, the George Soros of the world. And one of the things he says is that they did a study where you give people maybe 3 indicators, and they do very well. And then you give someone 40 indicators, you got more data, and they do less well. It's interesting.
Yeah.
That you want to stick to a few.
It's like information overload, right?
Yeah, exactly. Anyway, Tone.
It makes sense. Okay, so I'm looking at this chart. Just wanted to zoom in a little bit, and so this was our lowest point. It did come in. This was like a $2 price of Bitcoin, but this was also our biggest correction, right?
Why can't I see your cursor?
What's up?
I can't see your cursor right now.
Wait, I'm sorry. That's my bad. I was doing so. I thought I was screen sharing. Hold on. I gotta. Here it is.
Yeah, I see you.
All right.
That's what I was doing on the side. I thought you guys were watching what I was doing, but I was sharing the wrong application. So I just put it into Paint so I can draw on this. And so this was also our biggest correction. We went from about $30 down to $2. We've never had a correction that big before. And it was also in the early days. And so let's go for the layman's, because we have like 1,800 people watching us right now.
Mm-hmm.
This is your NVT signal chart. I actually like it a little better than the other chart because it's a little cleaner. It's a little bit, I find it a little bit better. So right here, what are we saying here? Oh, at this point, there was a lot more Bitcoin being moved around the Bitcoin blockchain at that point, correct?
Correct.
Right. And that's marking our bottom here. Now, we've never gone that low, but here's something else I'm noticing.
Hold on. Sorry, guys. Sorry. If we look at that 2011 low, and we look at the NVT signal, maybe we just missed each other. That to me says that's the lowest amount of transactions through the blockchain ever.
No, that's the highest amount. It's inverse velocity. It's the more coins you get moving, the lower that chart goes.
Oh.
So what that's saying is that there's a whole lot of people moving coins and buying in.
Which is good to identify ultimate capitulation.
Yeah.
Yeah, but guys, we know that people sell at the bottom. They don't buy at the bottom. This is not normal
buy
human
and sell is
behavior.
the same. Where there's a sell, someone's buying.
For every seller, there has to be a buyer.
Sorry, we talked over each other. Well, I think we see the same thing.
No. Tone makes a valid point. What were you saying, Willie?
Wherever there's a seller, there's a buyer. So you can't say there's a whole
You both said the same thing.
Yeah.
Yeah. So it's a whole lot of people. There's like weak hands moving to strong hands in these times of high volume.
Right now, there's a whole more panic. So people are panicking, and that's how they end up going broke. But here's something else that I see, and this is really interesting to me. For the first time on this entire history, I'm not going to count. I'm not really going to take everything. I'm going to take everything after this point. Like, I'm not going to take this.
I can explain that earlier stuff too, but carry on.
Yeah, but the earlier stuff is obvious. So since 2012, since this point in 2012, for the first time, here's what I see. And maybe you can spot another one. I see a significantly lower price. I should have probably made that thicker. I see divergence for the first time. Price went lower and NVT went higher.
Yeah. It's like RSI divergence.
Yeah.
I don't know what that means.
It's that it's getting more and more overbought and the price is going down. And so when you're overbought, the only way
what we have is classic
down,
divergence.
the price is going down. So it's going to go down more. Or Venzen.
Not extreme, but it's
No, that's the
if I just apply like conventional RSI divergence or any indicator divergence, we've got price making a lower low and RSI is not confirming that. RSI is making a higher low, meaning there should now be an upward reaction. This is a weekly chart or a daily chart?
This is a daily.
Okay, so
talking about the same stuff you started to see in the charts as a trader.
Yes, and I was blind to the fact that the reverse divergence to the upside of the NVT signal was saying it's going down. I was telling you, oh no, it's going to carry on going higher and then it'll reverse. I missed that initial leg of the decline. But right now, as Tone drew it, that green line that Tone drew under NVT signal makes you think that that's the bottom. Well, it could go and make a double bottom and then go to the upside. But, since it's already been doing this for weeks, holding, and we'll get to the moving averages with Tyler just now, this means that an upward reaction is underway. That's what I'm getting from the chart, from the NVT signal.
No, interesting.
Yeah. So Tyler pointed to this area here. See, this would have been a perfect time to buy because this means, hey, the price of Bitcoin has gone up and NVT has gone down. So even though the price is going up, way more Bitcoin has changed hands, like you said, from the weak hands probably to the strong hands. This is your classic divergence that should get you into Bitcoin. This, I'm not sure.
Yeah, I'm very bearish right now. What you're marking out with what Tyler pointed out is that this is the true accumulation band. And with this, you go to another chart, which is volatility. Volatility will drop when the accumulation, the strong hands buy in. It's the Warren Buffett saying this is undervalued. So they put a floor on the price. It was like, okay, sell into my buy wall. I'm just buying, right? This is the price I'm going to buy it. How much I want to buy? This is the price level which I can get my fill. And so what happens when you have a buy wall? What happens? You dump into it, you sell, it doesn't go down. And so what happens to the volatility chart? There's no price movement.
Hey, Willie, which volatility do you want me to go to? Bitcoin, the top
you go to volatility. You go to volatility.
Willie, quick question. Do you think maybe 2012 drop was due to the halvening?
The 2012 drop?
The halvening came like November 2012. That big drop came very late 2011. So it was a year before.
The year.
2012 was really funny times because this was Silk Road. There was a lot of velocity because Bitcoin was a currency back then to buy drugs.
Yeah, well, it was. I can name probably two bigger events in 2012. That's when the Chinese exchanges came online in 2012. And in 2012, if you ever watched the interview by the old Bitcoin Uncensored podcast with Trendon Shavers and the Bitcoin Savings and Trust out of Texas, he literally was the Federal Reserve Bank of Bitcoin, controlling the price of Bitcoin.
Yeah, I remember that. Yeah. So no, I don't think we can compare what happened in 2012. I think that whatever happened in 2012 was a freak because there was crazy stuff happening. You got Silk Road, you got the very manipulated market, certain people controlling the market, and so who knows?
Yeah, there's some. I mean, from an Elliott wave perspective, and we're talking hindsight. There's some strange things in the chart back then. Not impossible, but just strange.
Yeah.
Bitcoin does strange things.
I see a lot of strange stuff in that data in the early days. There's some of the early bubbles, like there's some crap going on there. Nothing correlates. Someone's manipulating the market.
Hey, Willie,
also the Mt. Gox days even. Yeah.
What are we? Anything you want to point to in this chart?
Yeah. Do you notice that see the yellow line, that's the price chart? Do you notice that every time we're at a bottom, volatility is low? Right? So you can look in 2012 onwards, there was bottoms and it was a bull market, volatility dropped. Do you see that in the 2014, 15, 16, where we're in a bull market, volatility dropped? The reason for that is because buyers are buying. Whoever's selling, they eat it up, and so you don't get these crashes. There's no liquidity drops. There's no like Coinbase and Ethereum, and it crashes to 10 cents because people are there to buy it. And so what you really want to look for is low volatility and high volume, but not on the exchanges. High volume on the blockchain because real people are buying and storing with the combination of low volatility. And we're not there yet. We don't have enough volume. Volatility is apeshit crazy because we just had this crazy drop and it's going up and down, up and down. We're not at the bottom. We were looking for a bottom signature. We want to see this crazy capitulation, high volatility, and a crazy flash crash. Possibly, not always, but usually, and then you see this big transition into low volatility because the buyers are in, but you need to validate that with on-chain volume. There's enough volume to show that these guys are not the tactical trade a game stuff on exchange, you want to say that these guys are buying and holding in their wallets. So yeah, we're not there yet. Far from it. I think we're probably 3 months away from that, based on the all of the blockchain indicators. There's many.
You know what? You know what? You got a great mind, and remember that day we were swimming out in the ocean there. We discussed so many things. I mean, it felt like we discussed everything in the universe. You and me.
Mermaids,
and,
right?
This is one swam by, and you and me differ on this point. I don't interpret what that volatility there says to me is unclear, because I want to ask you, because we're speaking to a general public, how is that volatility measured? What makes the red line in that graph that we were seeing in volatility? What is, are we measuring the average true range, or what are we measuring? Price?
You can think of volatility as, let's think of in physics as like,
I'll tell you, to give you a comparison, when I think about volatility, I think about what MACD is doing. Because MACD, when there's volatility, it moves away from zero, whether it's up or down. And when there's low volatility, MACD tends to tend towards zero. So you kind of get this MACD that kind of is always tending to zero. Then it moves away, then it comes back to zero very slowly. It tends to overcompensate and come to zero. That red line there is what? It's not MACD, it's something else.
The red line is really just how bumpy the price chart is. And it's a numerical method that's very, very objective that measures how bumpy the ride is. That's all it is.
Okay, and it's not any measure of the blockchain activity. This is price, right?
No, I can do volatility on blockchain. I can do volatility on price chart. I can do volatility on how much you scratch your nose, right? It's just a measure of how bumpy, how erratic it is.
Gentlemen,
okay, so coming for dropping down from 6,000, volatility ramps, and now it's busy cooling down.
Yeah, because we've just had this massive drop in price. And this goes back to the MVT, is that MVT saw this big spike in volume, therefore MVT dropped. There's a lot of coins changing hands, and that was fueled by volatility. Volatility means prime conditions, as you know, Venzen, prime conditions to trade. So a whole lot of coins went into exchanges to trade, because now is the conditions to trade. That is not like the volume there is not the accumulation volume, it is the speculative volume. So that's what we're in the stage of volatility being high, and it's the forerunner of the bottom signature. Once the volatility settles down and the Warren Buffetts come in, you'll see a different type of volatility signature, which is not about trading, it's fundamental buying.
You're making a distinction between what you call the tactical, sort of technical traders, day traders, on the one hand, and on the other hand, people who are storing value. You're making a very clear distinction.
And ultimately, long-term price is from the Warren Buffetts of this world. Like the tactical stuff.
You know what? This is why I said earlier. You know, Warren Buffett. I know I'm just a punk and a cheap imitation of Fidel Castro on this side of the ocean. But Warren Buffett, the thing with Warren Buffett, right, is he was a bull during the biggest bull market in history, a consistent bull market. And his success, right, is not indicative of anybody else's success, because we're in a different environment. Nobody's going to do what Warren Buffett did from the 70s onwards now, because we're in a different environment and going somewhere else. So if somebody is doing what Warren Buffett did, they're going to run into trouble, right now.
Well,
And
well-
I'm not contradicting what you're saying. I understand what you're saying. You're saying value investors.
Yeah, that's
As
a
long as
metaphor
they
for
buy
value
at the bottom,
investors.
as long as they buy Bitcoin at the bottom, they're going to get their store of value. But where is the bottom? And I think that's going to segue into. I'm really interested to hear what Tyler is going to say about the moving averages, because that's my game as well. This volatility is saying what? It's saying it's going to drop down, and that's going to be the capitulation to the bottom.
Say, Tyler, are we confirmed on the final stage of Hyperwave, or we're not yet?
Yes, we are confirmed. The final phase of Hyperwave is called a 7, and it begins at the top, actually, all the way back at 10,000 20,000 in December. Once you've broken the uptrend, you have to go through 3 more phases: a crash, which is 5, a bounce back up, which is 6, and then a very long period of time, which is 7. When I was talking about at 6,000 Bitcoin, the 7 bottoms we had at 6,000 that kept bouncing up to lower highs all the way down to the apex of that giant triangle that Tony used to talk about. We had the possibility of holding the phase 2 line going all the way back before the big run up. And that's a rare event. Only 1 out of 5 times in hyperwaves can you stop the fall of the final leg, phase 7, by bouncing off that phase 2 line. In this case, it was at 6,000. So ever since we broke through 6,000, there's no support using Hyperwave until you return to the beginning, which is 1,000. That was the phase 1 line. And I have never found a case when you cannot hold what was equivalent to 6,000 at Bitcoin that you do not return all the way to the bottom. That's 350 cases with not a single one violating that simple rule. There's only one other simple rule about a hyperwave, which is that after the crash in December, which is the phase 5 that took us from 20,000 down to 11,000, we then had a phase 6 return towards the top, which took us from 11,000 up to 17,400. The only other rule that has not been violated, and I hope somebody will find one at some point, is on that phase 6 bounce back up towards the top. Not a single example has ever gone back to the top. And that was what allowed me to make sure that clients got out if they didn't on the crash or before the crash down to 11,000, to look for a point on the phase 6 move back up to 17,400. You have to get out because it's not going back to 20,000. So those are the only 2 extremes where I've never seen a violation. So that's a long answer to we are confirmed in the final stages of a phase 7 that never tells you how long it's going to take. It only tells you where it's going to go. And in this case, 1,000 on the hyperwave.
Now, the guy who knows the timing, we just don't know the levels. Tell me, is the 1,000 or the 12? I'm assuming it's the 1,200 target because that was the top. Is that a wick or is it a time?
No, it's a closing price on a weekly basis. So it doesn't matter if you get big wicks up or down. It's the close on a weekly basis. And the problem, of course, with Bitcoin is there's no real close. You know, it's 8 o'clock Eastern time on the East Coast,
Sunday,
or 7 o'clock, depending on daylight savings time. So you have this theoretical point at the end of a week on a Sunday for cryptocurrencies, but it's just theoretical. So it's different than on securities, where at 4 o'clock on Friday's close, you get a close, and then you've got 2 days that everyone has anticipated that close on Friday to try to figure out what they want to do on Monday. We don't have that in cryptocurrency. So anyway, what I'm trying to say is 1,000 is the peak for me. When you go back and look at the two violations of 1,000 to the upside back in the earlier years, what you'll find is on a weekly closing basis, you got back down to the 1,000 or below level. So I'm using 1,000. That doesn't mean it can't be 1,025 or it can't be 975, but it's close enough for me. Now, what's important is that is simply the final target of a hyperwave. That does not mean it's the terminal point of price. So once we hit 1,000, that ends the hyperwave. There is no more hyperwave, but price can do anything it wants. It has achieved its goal. And now we see what happens. It could go to 900, 800, 700, 600, 500, can do anything it wants at that point. But there are no more hyperwave phases on the way back up. It disappears.
Yeah, it's on to the next pattern.
Willie, quick question for you, and then good that you have the NASDAQ up tone. People are asking what your price target is.
For Bitcoin, I'm working on a model which is based on MVT price. It's like working out what the value of Bitcoin should be based on what the fundamental buyer activity on the chain is. And I cannot give you a bottom price because of this wick. And I don't think that Tyler's 1,000 is out of the question. Currently, I'm having issues because my model shows that we're around 2,600 for accumulation. So, like the last bear market, we flashed down to 150, 250 was the accumulation. The model I have is 2,600, which violates the 200-week moving average, which is the behavior of Bitcoin in all the past bottoms. Now, what I'm seeing on the chain is that it's very sick right now. It's unlike prior bears. Even the 2014 was a Mt. Gox crappy, scammy peak. The activity on the blockchain right now is worse than that. And so it's saying in the 2000s, it says 2,600, but that's very experimental. It's subject to a lot of calibration error, and the error could go up to 3,200 is the accumulation bottom. But I'm actually thinking that, I don't know yet. I think that 2,600 is what the models show. And that doesn't exclude, and I am expecting a flash crash down below that. So low 2,000s, but how? 1,000, sure. For a week, sure.
Great. Yeah. Oh, go Tom.
I can jump in on this a little bit, unless you have something else to ask or you want to weigh in, Leah.
Oh, thanks. Well, I'll go for it, and then I have more questions for you guys, especially since you're brilliant traditional markets practitioners about its correlation to Bitcoin prices. So I think it'll go nicely, but go for it, Tom.
Hey, so I do want to jump into a few more of Willie's charts, but going back to Hyperwave, so Tyler's wave one, the one that we're expected to hit, the reason why he has it at like 1,000 is because he needs a straight horizontal line that Bitcoin price does not go above on a weekly closing basis for years. And the best way to draw that is basically a horizontal line on a weekly scale that does not close above that line. And you can probably draw that line in the vicinity of $750, $800, $900, certainly there's no reason to draw that higher than 1,000. Not a single exchange closed above 1,000 on a week closing basis. So that's where he has that line. Now, I am using the combination of the 2013 high, and you can say whether it's a spike high of 1242 on Gox, a spike high of 1163 or 64, I think, on Stamp, or a weekly closing high of like $750, something like that, right? So it's more like a range of that area. Now, I've also extended that range a little bit upwards to $1,350 because that was the swing high of March 2017. And that was the whole ETF volatility, the first time the ETF got rejected by the SEC. And we never back tested any of those numbers. So as long as we get down to 1350, I'm okay with that. That's like my upper end of that range. So when you were asking for potential exceptions, and you're right, Willie, because I'm looking at the monthly chart, and we have a monthly long-term moving average that we've never, ever closed below. And if we close below that monthly moving average, all I see is open air all the way down to that $1,200 range, which was the prior high. I am using the BLX index here as the average. My only exception, and Tyler has a very good explanation or potential explanation as to why, is my only exception to how can, like Tyler said, he doesn't have a single exception to prices going all the way down to phase one, which in his case is somewhere around $1,000. And from my basic knowledge of Hyperwave, I threw one exception at him, and that was the NASDAQ Hyperwave. If you do a Hyperwave on the NASDAQ and you draw your phase one as to the NASDAQ composite being below a horizontal line for years before starting a phase two angle, I can draw the lines, but I'm being lazy. I think that the highest horizontal line you can draw on the NASDAQ before starting your phase two is about $800. But the NASDAQ only corrected down to $1,200. That's a 50% higher price than the phase one line. So I think that could be a potential only exception of a Hyperwave not going all the way to phase one and reversing from a price 50% higher, which in this case would be approximately $2,000 in the case of Bitcoin. And then NASDAQ, it kind of stayed, went up into the 07 bubble, corrected, did not make a new low. And that was very, very key, I believe. And then it took off into a brand new, I guess, potential Hyperwave, but now it looks really weird. So I'm hoping that Bitcoin acts kind of like the NASDAQ and the end. And if we compare Bitcoin to the NASDAQ, I would say we just hit this. This or this. Maybe even we just hit this.
Yeah, I like what you're saying there. Yeah, I agree. But I want to ask.
We have one or two more lows in there and hopefully stay 50% above Tyler's phase one.
What is the exception with the NASDAQ? What is the thing? We need to find out, why did the NASDAQ not complete the Hyperwave as per normal? There must be a fundamental reason why.
Well, I don't know if there is or there isn't. 375 or 400, we're debating how many we've really got now. We've got a group of about 50 people that are been searching for hyperwaves in a research group over the last year or so. And we found some funny anomalies that I call nested hyperwaves. And what that is it's sort of the fractal relationship that we've seen in Bitcoin with people wondering, were those hyperwaves back in 2015 and back in 2011, 12? And my answer is no, they are not, for some technical reasons, but they look like them. They look like, here is, remember that my concept is that you don't get hyperwaves unless there's a major shift in macroeconomics. And the 5 or 6 big ones that I've talked about before is back in the 1920s with the Dow Jones, between 2 world wars that ended up with Bretton Woods in 1944. The next big one was gold and silver in the 1970s, which obviously was because we closed at the macro level Bretton Woods with the closing of the gold window in the United States, which then allowed gold to freely float. And what came with it is a tremendous surge in inflation and interest rates that ended with Paul Volcker in 1979 and 1980, and also ended the upswing of those hyperwaves in gold and silver. The next big one was the Japanese stock market that went from 1,000 to 38,800 over a 20-year period as Japan began to challenge the United States as the major financial center of the world. And by December 1989, you had the 10 biggest banks in the world all being Japanese. The next one came with what Tone has got up on the chart with the NASDAQ, which isn't the NASDAQ, it's the internet, and it's .com, and it's the explosion exponentially of what Moore did with his chips. All of a sudden, they started getting used across many, many things, and we had an explosion in technology that ended up being a hyperwave. Now, that's a long answer to this concept of nested hyperwaves in some particular securities or commodities, where they will start up and then they will come back down and then start up again and come back down. And that's why I believe that we are in for a monster move in Bitcoin to the upside once we get to wherever we're going right now on the downside.
Thank you. This is making me think about this, is that if you think about the NASDAQ, which is the internet, you've got this hyperwave, but I think of these things as 2 things. You've got a market, and there's a market, and it's like you can think of a market as something that's like a gold market, whatever. There's an established market. The interesting thing with the NASDAQ, which is the internet, is you've got this market dynamic playing out its bubbles, hyperwaves, but underneath that is a fundamental adoption S-curve, right? And so 1% of the world, back in 94, it was 3% of the world using the World Wide Web, and it started exponentially growing. And I'm wondering that this hyperwave did not go to the bottom because there's a fundamental S-curve and more people are driven into it. And this is the case with Bitcoin. And I've done the study based on Google data to figure out how many more people are coming into Bitcoin. And it turns out there's a Moore's law of Bitcoin. Every year, just over a year, but I think it's 11 months, something. But essentially a year, every year, we get 2 times more people inside the Bitcoin ecosystem. And in that regard, it is probably more reflective of the NASDAQ, that you've got this S-curve of people jumping onto the internet. And in that case, we could see the hyperwave end shorter because it's a wave that is the wave superimposed on this fundamental other wave, which is going up.
Wow, that's an incredible observation. I've had some people in the research group make a similar one, having to do with what happens with certain hyperwaves is it spawns correlative hyperwaves in similar things. What I mean by that is back in the 1920s, we had a phase 1 from 1908 to 1922, where the Dow Jones Industrials couldn't get above 100. So it went for 14 years forming a phase one of a hyperwave that finally broke in 1922. And then we went into a phase three and a phase four before the crash in 1929 that took us all the way back down below 100, down to $44 on the Dow by 1933. Now, the reason I mention that is because I've got 75 or 80 examples of individual stocks that did exactly the same thing over that period. But they're across all sectors. There's utility stocks. IBM was actually one of them. Westinghouse was one of them. But it was things like cigar companies and things like coal companies, and just a tremendous number of hyperwaves were spawned off of that bigger one. What you're suggesting is that we're only looking at a two-dimensional chart here, but there's really three or more dimensions going on that you don't see on a chart like this that can affect that chart. And I've got to give that some thought, but that's a very interesting observation.
Tyler.
Yeah, it's waves upon waves that are superimposing.
Yeah, exactly.
Tyler, if I could follow up, and this is something we have not talked about, so please shoot me down, actually. Just thinking about actually looking at the chart and given it's an indice and obviously that it's a NASDAQ. So afterwards, as we very well know from the dot-com bubble, we had a huge shift in what the Fed was able to do, what they did do, and the powers that may be that they have now, which is insane compared to what their main debt actually is. We also saw a lot of leveraged buyouts and M&A right during that time period, again, when we're starting to have a bull market again, but also China's growth. Now, if we relate it potentially to Bitcoin, I would potentially see China's growth there as being the rise of so many alts and you having competing powers more than there was before for Bitcoin / United States. The Fed and its change up being potentially right now, government regulators confusing the space and until it gets smoothed out. And also just regarding inflation, deflation, and what people are thinking about regarding store of value. And lastly, potentially regarding the LBOs that took place, that there's so many manipulation in the space if we go out of LBOs but M&A. So, you could totally disagree. I'm just throwing these thoughts out there. But if we find any correlation, if maybe that these are true, do you think that, one, that could have impacted what we're seeing here, but as well as in Bitcoin, that maybe it will impact the hyperwave that we're seeing now, and that I believe we're going to hit 1K because I'm with you on this, but that we will see a funky hyperwave when we clear out all these different things that was cleared out and changed up in the NASDAQ.
Yeah, I think I understand what you're saying, but it's very similar also to what Willie just said, that we are seeing a huge number of hyperwaves around the world, mainly with individual securities, individual stocks. And what I'm trying to resolve in my mind is, what is the giant macroeconomic theme here? And I believe what Bitcoin has been saying for the last 10 years or the last 8 years, going on 9 years, and what the credit markets are saying around the world with world debt can't be separated from each other. Those that have listened to some of my hyperwave presentations know the largest hyperwave in history lasted 80 years. And it was the credit and debt as measured by the 10-year US Treasury bond that in 1942 began to surge in terms of interest rates all the way for 40 years until 1980. And that's where the hyperwave broke. And interest rates have been falling ever since until 3 years ago. So it was 80 years long. And what it was signaling is the move that occurred 2 years later into Bretton Woods that tied the US dollar in with gold and made them the reserve currencies of the world. And prior to the peak in 1979 of interest rates and inflation, we had Nixon close the gold window in 1971, which allowed inflation and interest rates to go to their final high in 79 and 80, and they've been falling ever since. Well, what all that did is it spawned the ability for central banks around the world after 1971 to take free rein with fiat currency and simply print as much as necessary at any point, along with finance ministers, to take care of problems like 2001, 2, and 3 after the dot-com bubble, and 2006, 7, 8, and 9 after the mortgage bubble that almost brought the world economy down. And what was spawned immediately after that was Bitcoin. Now, we can argue if that was coincidental or not, but I think
I'm on the coincidental side.
Right. But history doesn't repeat, but it does often rhyme. And one of the things that rhymes to me about when that particular thing not only was introduced, maybe it wasn't introduced by Nakamoto because of what had just happened, but I think the adoption of it by so many people that had been so badly burnt in the previous 4 years made it into what it is today in terms of the demand for what Bitcoin promises relative to these bigger macroeconomic things going on.
All right, guys. That was great.
I was just replying in the live chat. Hey, so for those watching, because this video has gone over 2 hours, I have no control of the upload. So what's going to happen is the last 2 hours of this video will be immediately available, but the rest is going to take time. Like Google takes time to process this. So I know people aren't going to be listening to this part, but that's kind of how it works. So whenever there's a video over 2 hours, you only get to see the last 2 hours until it renders the entire thing, and then you can see the whole thing. Like, I'm not going to take the video down and then manually upload it because, first of all, I'm not even recording it manually, just so you guys know. All right, hey, Willie, I want to go back to some of your other charts, unless you guys want to keep talking about Bitcoin or where we think the bottom is, which we haven't actually done yet. But I wanted to just run through a couple of your charts, and then we'll do our final Bitcoin predictions, unless Leah has amazing questions. What do you want to do next? Leah, questions? Or I really want to run through the right side. Actually, I wanted to quickly look at the Mayer multiple because it doesn't tell me anything. Maybe I'm missing something. Everyone is always pointing me to the Mayer multiple, and I'm just not sure what I should be looking at. Maybe Willie can educate me.
Well, I'm kind of with you. I don't think it tells us a lot. It's really just where the price is fundamentally next to the 200-day moving average. And, there's some argument that it is not much different from MACD. And so I don't use it a lot. Sure, you could use it. It kind of works, but it's not very fine-tuned accurate. So if you really want to time things, I don't think this is all just based on market dynamics.
I think it's useful for a long-term buy and holder, but not for someone that's even a position trader. I think they need to be a little more on top of other metrics.
Yeah, and it's like, look right now, it's saying buy, buy, buy. And we're all going, look at the details, look at the physics of the stuff, and it's going to go a lot lower. And you can see in 2012, it dipped way lower, yet this thing is saying buy. And there's no guarantees this is not going to dip.
I think it's done a fairly good job of telling you when to sell.
Yeah, that's true. But that's just like in relation to deviation from 200-day moving average. And actually, you know, like one of the things that's really good, like look at that dotted, can you guys see the dotted line? It's very faint, but wherever the price crosses the dotted line, which is the 200-day moving average, it signals whether we're in bull or bear, right? So every step along the way, boom, we're in bear at 2011, boom, 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 boom. And then we crossed over in 2012 and it set up the next 2-year bull run. And then it crossed over into 2014. And then it set up for the next 2 years of bear market and then it crossed over. So you can track that. It's one of the best indicators of bear bull, and Mayer multiple works off the 200-day moving average. And if you're a long-term trader, you're going to hold over 4 years, great. But if you're going to be precision, we need to default to our stuff, right? Like Hyperwave, MVT volume, there's a whole lot of stuff. A lot of Murad stuff as well, the MV-RV ratio. There's a lot of very accurate physics happening because these fundamentally we're tracking movements and funds on the blockchain.
Now, this is actually a really interesting chart. I saw it recently over, I think you tweeted this one out. And the reason why I liked it is because this one is truly telling me we have just started the late year of 2014 where momentum was going up, but capitulation was yet to come, and created a beautiful divergence where the price dropped hard, but your momentum line, which I'm not sure what you're using to draw that, but your momentum line barely budged, even though the price crash occurred right here at the back test of momentum. Thoughts?
I didn't get the question, but like, look, you know.
Oh, what it is, Willie, let me phrase it a different way because I'm observing the same thing. You got your momentum going up to reach a peak at the bottom of the bear market of that was January 2015.
Let me zoom in on this.
Yeah, what's happening
I want to get the 2011 stuff out. I just want to focus on this.
Yeah. Okay. Right. Let's talk about what momentum is. Momentum is this is the number of bitcoins being moved on the blockchain. So this is, you can talk about this as
so this is blockchain data being plotted, not price.
Yeah, and it's not US dollars, it's the sheer number of bitcoins being moved on the blockchain. And if you think about bitcoins moving on the blockchain, predominantly it's coins changing hands. People are buying in, they're buying out. Maybe they're buying in to buy into an altcoin or whatever, but it's coins changing hands. But when you get to a point where the market is at bottom, again, it's another view of the value investors saying now is the time to buy. And I've got, you know, I'm a billionaire or 100 millionaire. I'm going to allocate capital and I'm going to buy it and I'm going to hold. And so what you want to see is enough volume to signal that these guys have come in and they're accumulating. And so like at the top of the market, you're going to see, let's go back and we're looking for it.
Hey, Willie, I want to draw something. How can I, because I can expand the, I can just slide it. I can't actually.
More expensive to buy.
I can't. Okay, I got it. I see what I want to do. Okay, I got it. I know what I want to do. Never mind.
Right. So anyway, so you want to see a certain level of volume going through the network, which means that people really want to hold these coins. Before the top, you'll see a start of teetering of coins changing hands. That means that people are not buying in. So yeah, it's just another view of NVT. Actually, if you look at this, it's actually MVT upside down with a little bit of coins in circulation adjustment. MVT takes into account the coins in existence. This one doesn't. So you'll see over the long term that it's creeping upwards because there's more and more coins in the network being traded.
So I want to show you what I was talking about, Willie. I'm gonna jump over to my favorite application.
Paint.
That. Let's do that. Perfect. Can I go higher? Yeah, I can go higher. Okay. So here's what I mean, right? So we have what looks to be a clear, make it draw a box, a clear consolidated low right here.
I can't see. Oh, here we go. I see it. Yep.
A clear consolidated low right there. From here, the activity on the blockchain, the activity on the blockchain begins to rise.
Yep.
Very, very clearly. And the activity on the blockchain begins to rise as the bear market continues, like goes into its final phase. The capitulation, now this is what I'm finding a little very interesting. The capitulation, put that in deep red. This was a 50% crash in the price of Bitcoin in a matter of 48 to 72 hours, if you remember. Might have even been 24 to 48 hours. To have almost no visible move in your momentum indicator. It's smoothed out pretty nicely. Okay, so that's good. And now we sort of begin a very different consolidation phase. This was consolidation to me. Oops, box. This was a bit of a consolidation to me all throughout. And while we're consolidating here, momentum gave you this higher low and we went up. But it's this area that it's this area that's interesting to me. This. Okay. Now, if I slide over to the current environment, what do we see? See, once again, very good consolidation at the low, right? And momentum starts to rise.
Yeah, I see the same thing. Yeah. You're right. Yeah.
As the price starts to fall into its final capitulation phase. Now, we don't know where this is going to end, but I'm liking this particular similarity.
Yeah, it's really interesting. It's really interesting because the landmarks on the price chart can lead you astray because it's kind of like 2014, but the landmarks on the price domain is it's very hard to read. But when you look onto the blockchain and the MVT and the value of coins moving on the blockchain, it's very similar. And then that's how you relate back to the price landmarks. And where you're drawing, it's very astute. Where you're drawing it is exactly where we are in the bear market right now. And
right, right. Oh, I'm sorry to interrupt you. But if I was to like make a true comparison between the two at this point, and I know I already used purple, I'll do it again. So to me, this and this is basically this.
Yes. And so I was discussing this with a few people this morning, is that one of the possibilities, I did not expect us to be in a two-stage bear step down, right? If you look at the 2014, we had this false pump, false, the 6,000 was like, oh, with the bottom. And if you go back to 2014 and we see the little hump where everyone was bullish again, and it was false according to the blockchain view. And then we stepped down and we had this, looked like a a capitulation, but it was not. And then it was followed by a sideways band before the true capitulation. And what we're seeing right now on the blockchain view of it is that we are actually in starting the next sideways pattern before the true capitulation. So the interesting thing that means is that the bear market might be longer than we thought. And yeah, it's very, very similar. And before I finish, this is not my chart. This is a guy called Crypto Positive on Twitter. He was the first to present this view, and I liked it so much I put the live chart on. So it's not my work. It's essentially it's MVT inversed, but it's a very clear picture. But yeah,
I think it's a little
Tone, just 1 second.
Yeah.
I gotta run. Have fun, guys. Tone, I sent you all the questions from the live chat in our private chat, and there's a good amount. Bye, guys. Thank you.
Really nice to meet you. I'm really sorry I can't come to Vegas and meet you in person.
Oh no. Well, I will see you in your side of the world pretty soon, actually.
Oh,
that's a surprise. But bye, guys. Have fun. Can't wait to listen to this a little bit later.
Okay. See you.
Bye. All right. So I think we're done with that chart. And the reason I'm saying it's a little bit more, sorry, we're not done with that chart. The reason why I'm saying it's a little bit more than NVT inverse is because to me, NVT doesn't flatten out. Anyway, it might. I have to compare the two of them again. Anyway.
Well, there's NVT and NVT signal, which that's slightly different. But if you go to
that's true. That's true as well. Yeah, we looked at all those. I just want to remind myself what this is. Nope, we don't need to talk about that. Oh yeah, let's talk about this.
Yes.
So this is. Do you have anything more creative than this? I know you do with more stuff in the same chart, but this is a standalone.
Yeah, we're getting a lot of divergence. You can see this chart's getting pretty sick. But the blue line is the volume on the blockchain, right? And the red line is what the price is right now. And these two things need to correlate. I can go into the maths, but it'll bore you, and a lot of people don't get it because it's maths. But there's fundamental mathematical reasons why these two need to track each other. And what we're seeing right now is a dive in blockchain volume. And you could think of this as investors are not moving in right now, and the price is too high based on that. So it's diving. It is not healthy. It's very not healthy right now. And actually, like I was saying before, it's more unhealthy than our 2014 bear market. So I do expect things to drop lower, and I can't correlate why we're not going to hit this. Well, according to the models of this blockchain stuff, is that we should be accumulating at around the 3,400 mark if you want to use moving averages, the 200-week moving average, which, Tone, you were one of the first to talk about this. But right now, it's so unhealthy what's happening on the blockchain that it's saying we're going to accumulate lower. But I could be wrong. I could be screwing up my stuff.
No, we'll get to the price predictions in a minute. Just want to walk through some of these charts. Bitcoin network properties. This one is new. I don't remember us ever talking about this. Want to give us a quick rundown?
Oh, this is actually, it's been always around. So it's just these things. Well, where is it? Valuation, throughput, security, utility, right? So each utility is like the fees being paid. Security is like miners revenue. Throughput is how much volume is going through the chain, and this is the valuation. So traditionally, a lot of these things track together. So really, it's just a chart of looking at the different components that we should be looking at that arrive to the market price. And right now, utilities dropping. Yeah, you can see it. Anyway, next chart.
Yeah, this was, I'm actually using this in one of my presentations. I think I'm the one that commissioned this one from you.
Yes, I built it for you.
And this is actually great. Oh man, so unfortunate to see SegWit transactions going back down. What's up with that? Any thoughts?
Maybe it's liquid sidechain. Like, actually, see that spike? That spike is the sidechain, just before the sidechain. I'm thinking
right
a lot of transactions went in to peg into this to fund that sidechain. And that's just my theory. I don't know for sure.
I have another one.
Yeah.
I think it's I don't think it's the liquid sidechain. I think it's more Lightning than the liquid sidechain. And here's my explanation for that, is because all the people that were interested in small Bitcoin transactions, they were savvy enough to get on SegWit very, very quickly. And that's the same, group of people that are probably testing out Lightning with those same small transactions. Meanwhile, the people that were never interested really in Lightning, they're still using, SegWit Bitcoin addresses that start with the number 1. And I think a good fraction of the people that were quick enough to get on SegWit were also quick enough to get off of the main chain and doing their small stuff in Lightning.
I'll tell you, like, zoom into that. Zoom in. Let's see how much that spike was. I think it looks like 1 day. And I think that if it was the Lightning side of things, yeah, it's 1 day.
Oh, no. I'm sorry. No, this spike is absolutely liquid sidechains.
Yeah, okay.
I'm just saying the downtrend is being exaggerated
I see what you're saying.
by the Lightning as well, because that's the same, more savvy group of crypto people. The crypto people that started the SegWit upswing are the ones that are currently causing the downswing because they've moved a lot of those small transactions onto Lightning already.
Right. Yeah. Okay. Maybe. I don't think that these small transactions, paying for coffee, all sorts of stuff, is very significant on the chain. And
well, that's the thing. They might not be very significant on the chain, but this also measures, I think, percentage of all transactions, right?
That's right. And it's like, how many transactions is for paying for stuff versus investing in stuff? And I think, I mean, we're exceptions, Tone. We use the coin.
You missed one more category of payments. There's investing, there's payments, and then there is real life testing with real money of small transactions, for which, like, if you're going to test out a new product and you want to test it with 5-cent transactions, you were doing it with SegWit transactions. Now you can do it with Lightning.
Right. Okay. Be interesting to know what that proportion is.
I have no idea, but like anything new coming out needs testing, and it would be very difficult to test if your transaction fees are high. So you want to test with the lowest possible transaction fees.
This is a very, very good mystery. I haven't been watching this chart, but yeah, it is. We need to get to the bottom of that. I would have thought it would carry on up, but it's not. And we've got Lightning Network and sidechains that are 2 possible explanations. Maybe it's both.
Guys, what is being measured by that the yellow line in that SegWit chart? Is that the
proportion of transactions on the network that's using SegWit instead of the traditional
the traditional, starting with the 1 non-SegWit?
The 1 instead of the 3. Yeah.
So it's showing that it's as if the 1 transactions are increasing, or yeah.
I think you're right, Tone. We've got a whole lot of stuff moving off chain, and those guys are using SegWit transactions, and those guys are not needing it as much. And I think it's both. I think it is Lightning, and I think it's also sidechain. Like, there's a lot of transactions happening for market makers, all this sort of stuff. They happen every hour. They're sending transactions to rebalance their market making accounts. So that's a lot of transactions.
Yeah, so I wouldn't necessarily say that the non-SegWit transactions are rising. I would say that the SegWit transactions are falling because they're already starting. Those same people are starting to move off chain.
Well, yeah, it's in that chart where there's one of them, SegWit transactions. It is rising. Well, it's flatlined is what it is, the red line. Look at the red line at the bottom.
Yeah, the red line is the number of.
It's not declining. Yeah.
Right. Yeah, no, this is a great chart. Also shows you in the blue the payment, the average transaction fee, which is what I really needed for my presentation as a slide. So thank you for this.
Yeah, and this shows you why the ICO and the altcoins pumped. It was over the blue line. It was like they bailed Bitcoin, and it was the opportunity for altcoins to shine.
I mean, and it also shows you how all the propaganda that Bitcoin is slow and Bitcoin is expensive took place at the end of 2017 into 2018, and the parrots continue to repeat those stupid talking points even today.
Yeah.
Even today. Yeah.
And actually, a lot of those fees being driven up was deliberate attacks on the network to drive it up by miners because they could make more profit by getting more mining fees.
Well, not just miners, right? It was by miners. It was by economic nodes that wanted more control and kick out the core devs. It was by people that wanted to push their altcoins and their alternative.
It was war.
I mean, it was I think it was the greatest like attack campaign Bitcoin has ever had in its history, and I can't see like it survived, and I can't see it having a bigger attack campaign. I mean, it's great.
Yeah. No, it was a good piece of
nice
work and survived.
Yeah, well said.
All right, Bitcoin throughput or not that critical?
Yeah, the blue line looks sick. That's the value being transmitted. The other lines look okay. It's being used, but the blue line is more reflective of investors, and it's looking sick.
Yeah, let's hope it's coming up on some very critical prior highs, and that would be kind of bad because if we go much lower, we can breach the 2013 highs.
Remember, this blue line is really what the price of Bitcoin needs to go to. This is fundamentally, this is money coming in and out from investors. And the blue line is the true price chart. The price chart we see, the market cap price, that is the blue line with the superposition of trader games, essentially.
So this says that the 2013 top was at $3,640.
How do you get to that?
It's just what your blue thing is showing me. November 2013.
That was how much was being transmitted per day. That's not the actual. But what you need to do is multiply that by a factor. It's the MVT, and then you get the price of where it should
right.
be.
No. I got that part, but I'm just saying that like it would be very weird if we cross below that number like next month.
Wow, you know what I'm saying? It's not far off Tyler's Hyperwave. We're getting pretty close to that peak, and that's where the price needs to get to. Yeah. When Tyler, when we were on that show the first time, and we were like, "What do you guys think?" And I was like, "Everyone's going, no, I don't think it's going to hit 1,000." I'm changing my mind looking at this data.
Yeah, well, what Bitcoin does is it likes to test prior peaks, and it does so consistently. So if it did retest this,
you can see it.
Have we done it?
2014.
Have we done it already, or is it to come? Or
well, we're quite close to it. But you look at the 2013 to 12, it peaked, and then it went peak, and then it came back down to the previous peak. And even
Bitcoin will always retest
the Hyperwave on Hyperwave, really. really is. So yeah, there's a lot of credence to the hyperwave here. I'm really enjoying this. I haven't studied it deeply enough, but I'm already seeing it in this amount of time we've had.
Another one of these charts that I wanted from you. Yeah, this is similar. This is just with an additional block size. So that's good. So more transactions were able to actually be getting into the blocks.
Yeah, we want to. The ideal case is to. Why are we getting back echo? Is someone needing to mute?
I think no, he's wearing headphones. Oh, it stopped. Yep, that was me.
It's me introducing that back.
Okay, all right. So you don't want to go too high, because when you go too high into that red zone, that's the zone in which Bitcoin starts to slow down. Your transaction is going to be, instead of 10 minutes, 20, 30, half an hour, 2 hours sometimes, right? So that red band is compressing, actually. That was the red zone for the last cycle, well, the last layer of technology. But we've had a lot of efficiencies, like the fiber network came in. They actually added a lot of efficiency. The latencies dropped, and so you can think of that red band as getting smaller and smaller, but you don't want to hit into it, that red band, because when you get into there, you're in congestion. And this is why, you know, the work of Core, Adam Back, all these guys, the side chain is really important to offload volume. So is Lightning Network. Yeah, it's and it's also healthy. You know, you want to get close to it, but you don't want to hit it.
Hey, so I'm finding something else very interesting here, right? So as we just talked about, the number of SegWit transactions by percentage hit a low from April of last year. So basically, 2 weeks ago, the number of SegWit transactions by percentage was equivalent to the number of SegWit transactions by percentage back in April of last year. That is not great progress, right? Now, we have just come up with some explanations as to why this is happening. We have two. Just one explanation, stuff moving to side chains. Now, overall, we can say, hey, the number of, and this is actually a good thing, because even though the SegWit transactions by percentage have decelerated, this is proof that the number of non-SegWit transactions is not accelerating at all, because look, the amount of space in the block the amount of stuff in a block has gone down. So even though SegWit transactions have dropped, we're still dropping the amount of space we're taking up in a block. So that means overall transactions are going down, to me.
Yeah, transaction count is going down, you're saying?
Yeah.
Yeah. It's and I'd say that, like, you know, SegWit takes a lot of work for a developer to implement, and I know that you know, I'm involved in some ways with Exodus Wallet. I really like those guys. They do a really good job, and you know, they don't use SegWit yet. They're working on it, but it takes time to get things solid, and there's priorities, and like, I think that it just takes time, you know. And then it'll move in waves. When they release, boom, all the customer base uses it. Hash price.
Yeah, what's hash price? I don't think did we talk about this chart last time, or is my memory that bad?
Every hash that's generated, this is the price in which each hash costs. So I don't think it's very important. It's more to track. What you can see is the different phases of mining. Like, you can see the early 12, 13 phase, there was this GPU phase, and then we had it sort of dropping. You can kind of see you see it dropping from 13 to 15, and that was the ASICs coming in, making each hash price cheaper. And then what we're seeing in this last year is another drop. And what you can say with that is that there's a whole lot of new technology coming in that's superseding S9 ant miners, and they're being more efficient. And because they're more efficient, it's cheaper to produce each hash. So in a way, you can see that, you know, because mining, you're gonna if you're gonna create the next generation of chips, you're probably gonna mine it yourself. It's profitable too because you can beat the old technology. And so what this chart shows is that you can see the early bird miners who are mining in the dark getting a run up on everyone else before that technology is sold to the rest. That's all.
Very cool.
Well, this business about mining is very interesting because as you often say, Tone, it's very clear that Bitcoin is leading the way in technology innovation, you know, in terms of energy efficiency and number two, miniaturization. You know, to get these ASICs to 7 nanometers and smaller. This is not something that Samsung has to do for their phones or for televisions. This is not something that Texas Instruments needs to do for their components because the industry is standardized. You know, you produce a silicone chip at a certain size and people use it. They're going to buy it. That's how it is. But in Bitcoin, we got innovation going on because these guys need it smaller, faster, and more efficient. The smaller you get that silicone little layer, you know, the more efficiency you're getting out of your chip, the faster it can hash, the more it can produce, the more Bitcoin it grabs, the most valuable commodity in the world. We are on a bleeding edge of technology. So that chart previously, the price of hash price is fantastic because it was trending up, right? It's trending up right now. It's dipping a little bit, yeah, for sure, because now people are like, well, is it worth mining? But come the next bull market, boy, they're gonna jump in there.
I'll tell you what, it's like all of the stuff is really important, right? The new technology going into the chips. Yet we don't know what the heck's going on. Like this stuff is done all undercovers, top secret projects, they're mining undercovers. So like Bitmains are selling the Antminer S9s and the S10s are coming out and it's like, oh, it's already out. Or there's some other, you know, maybe it's Samsung. Like this technology is out and you can see it in that chart. They are like that line being driven down in the previous chart shows you this technology is out in the wild or people are playing with it before the public announcement. So if you're going to be an investor into Bitmain stock or any other mining play, you can use that chart. The great thing about the Bitcoin network is everything's transparent. You can see in the data. It's like going into the company and auditing everything. With privilege.
Yeah.
All right, guys, real quick. Willie, any explanation for the data anomaly right here?
Outputs. Oh, it's just spam. Remember there were spam attacks?
Oh, that's a spam attacks. Oh, yeah, God, no. Yeah, I can prove that with my own wallets that from like 2013. Okay, I can explain this. Just not going to right now.
Yeah.
Okay.
It was spam attacks.
So that's it. We are done with, and that's actually a good chart. Actually, like pretty much proves that it was a spam attack. This is not normal. There was no like demand for Bitcoin in late 2015. Well, wait a minute. The spam attacks didn't happen in 2015. That should have been in 20.
Well, the chat disagrees. It's the outputs being generated.
Tony, you got a peak. You got a peak in mid 2017 where there were also spam attacks.
Right. These are the spam attacks that I was thinking of. I don't recall spam attacks in 2015.
ultimately, when you want to figure out whether the network's being spam attacked, is to look at the data on the chain, and the data on the chain saying spam attack. Yeah.
What is being measured there? What's being measured, Wu? How do we get that peak in that graph there?
So that was, I'm just reading the title. It's outputs per transaction. So
the number of UTXOs, the number of UTXOs in a particular transaction. Yeah. Okay.
Yeah. And so, like, a lot of those spam attacks was, let's just fill up the block space. So we do that with one transaction with a lot of outputs.
Yeah.
Hey guys, show some love to Willy Woo for all the work and all the charts and all the free content. There it is. There's Willie's.
Dude. Yeah, you're
great stuff.
doing.
Great stuff.
Thanks,
hey.
You're doing it, man. Nobody else is putting the amount of time and the mental compression into producing what you got on one page, man, for free. Yeah.
I know, and then he's
Thank
got
you.
God knows how much more that needs to go on that page that he hasn't done yet. Hey, Willie, so
yeah, he's got a lot up his sleeve as well. Yeah.
Before we talk about our price predictions going into 2019, Venzen, you don't publish much stuff these days, unfortunately. But people have asked anything new. I know you're big into like loon phases. Anything you wanna give us? I mean, I'm always curious.
People are always nailing me on this moon phase thing, and I mentioned it like once or twice, and I use it maybe like 3 times a year. We just had a lunar eclipse on the 5th and the 6th, and it was like a new moon. That's why you got a lunar eclipse, right? Because the moon is on the opposite side of the Earth from the sun, and the Earth happens to be in the way, so you got a lunar eclipse, and that's a new moon, and just from basic sort of calculation, I worked out the percentage over the history of the Bitcoin chart and some other markets. You got about an 80% chance of there being a market reversal or a capitulation at moon phase maximum. So whether it's full moon or new moon, it's not a trading signal. It's just a date to look for a signal in your 2 or 3 indicators, right? Like you say, Willie. I mean, if you look at 40 indicators, you're not going to see it. You look in a few indicators, you understand your indicator. If you get a tone-based time indicator 9 on a new moon, then you know what's going to happen. It's going to reverse, right? That's all. And
I'm a bigger fan of trading astrologically than Elliott waves, so I'm
you guys always hammering with me with this damn Elliott wave. So now I'm becoming an astro trader, right? Well, guys, it's lame. It's lame. I'm the astro trader now. It's lame. You got an 80% probability. That's a high probability in the market. Just for a 2-week move, because it's 2 weeks between moon phases, it's not much, As an intraday trader, it doesn't benefit you much. As a intra-week trader, yeah, but the fact that we got a new moon and we've got referring to Tyler and the Consensio moving averages method, we've got a 1-day buy signal with a 1-day moving averages and a 4-hour. I'm thinking we've got a week or 2 of advance ahead of us. The moon phase coincides with that and kind of confirms it, but I wouldn't buy just full moon or new moon. That you need something more substantial than that.
Yeah, and I saw somebody tag me in a tweet where they took like a chart and they put like all the moons on there, and you can see how I don't know how accurate it was. I don't remember where that chart was, but it seemed like you can get nice patterns out of it. You know what? So what are we? Look, it's just another indicator, right? It's no better or worse than any of than an oscillator that you may be using, as long as you're consistent, as long as you keep your
No, as long as you got a way of managing your money when you
right.
do this, you're gonna win. Right. Yeah.
So are there any dates we should keep an eye on?
Well, you know, full moons tend to attract price into a top and then a reversal. This is what I've observed. So we've got a full moon. Just give me a second. I actually made a note of it. We got a full moon coming up on the. Oh God, man! There's so much writing on this page. We got a full moon coming up near the 22nd. I expect an advance into then, and I don't know if Tyler is actively watching the moving averages. We definitely got a lot of moving averages saying that trend is up right now for a short period. Then trade into the end of the month and take some profit. That's it. You know, I try to make my life easy. You know. I had people telling me today that the altcoins are all moving up. I say people, a consulting client told me all the altcoins are moving up and Bitcoin is keeping stable. This is always a sign that Bitcoin is going to shoot up. I hope he's right, because that would coincide with my moving averages analysis. Willie, you saying it's false?
It's altcoins always just go up when Bitcoin is static. It's just
okay, so it's not a directional. The other thing I can say, Tone, the chart you got up there, it's got a moving average, and price kind of dipped close to it. What period is that? Is it 50?
No, so this is Willie's chart from his Twitter. So the red moving average is the 200-day, and the green is the 200-week.
Yes. Yeah. You see, so prices come close to the 200-week, which it hadn't touched for 3 years, and price will always come and try and reconnect with its 200
when those two
period moving average. Whether you're in the 5-minute chart or the 1-week chart or the 1-month chart, price always tends back towards its 200 period moving average. Right, Tyler?
Yes, and that's why so many people use that. Even people that aren't chartists, you know, you see it everywhere. You see it in Barron's and Wall Street Journal and Investors Business Daily, the 200 period, and who knows why? You know, who knows why that is so significant?
Who knows why?
But the fact that more and more people believe that it's important makes it important, and therefore you've got to follow it.
And price always tends to revert to it. So now we've had a reversion. Price might come and actually touch it. But what Tyler could also confirm with these moving averages knowledge is price doesn't come to the 200 MA and then cross through it. It doesn't just go below it. It touches it, and then it reacts to the opposite side, and then it can come back to it and penetrate it. But it's never a case that price, if you look at Bitcoin or the NASDAQ or the S&P or the Dow, or gold, it never comes to the 200 MA and just slices through it. The 200 MA somehow, and we don't know why, is so significant that price comes to touch it, bounces away from it, and then often returns if it wants to slice through. Can we slice through? I'll have to talk for 5 or 10 minutes about that.
When you say slice through, you mean
because everyone's got an opinion. So yeah.
When you say slice through, you mean the price crossing the 200 EMA?
Price actually crossing it. It never just comes to it and then slices through it. It comes to it, bounces away from it, and then if it wants to cross it, it will bounce away from it, go to the 50 MA, and then penetrate the 200 MA.
Yeah.
on a crossover, and
Yeah.
I make my life easy. I don't care about fundamentals. I don't care about news. I only trade the crossovers, and I've got a 7 out of 10 success rate just trading the crossovers. I've been recording them for 4 years. You know,
very accurate.
not to cock-a-doodle do, but Tyler will confirm for you that the moving averages don't play. You know, they can give you false signals sometimes, but 3 out of 10 will be false and 7 will be good. So I just sit and wait for those guys. That's how I became a guy that can work for myself and earn Bitcoin just from that. Accidentally, I went and looked for a moving crossovers. A Cuban guy once told me on the internet that the moving averages are the key. And I was like, well, it's a lagging indicator. You've got to take into consideration Elliott waves. You know, I was all Mr. Know-it-all after losing all my fortunes on the Dow betting against the Fed. And he said to me, focus on the moving averages. So once I got into Bitcoin, I in desperation, I went there. And I tried and tried and tried. And I found that it's true. If you go and look for yourself, it's empirical, it's observational, scientific data. You don't have to believe what I say. Go and verify it for yourself. When there's a moving average crossover, doesn't matter which moving average, you can use any number you like. Use your girlfriend's birthday and use your own date of birth. When they cross over, there's a signal for some fucking reason. Sorry for the bad language. I hope we don't get demonetized.
No, it's fine.
It's just puzzling. It's puzzling. Yeah. Yeah.
Hey, yeah, no, thanks for that. All right, guys, it's like past midnight where you two are, and I do want to wrap this up, but Willie, so I'm looking at your chart, and I've been saying very similar things. We're gonna bounce into that $5,000 area and then proceed lower. And the only thing I have to say is, I mean, maybe you can give us some more comments. Like, I've also been like I'm realistic that my target is down in the $1,000 range. If we, like, you yourself have to admit, if we bounce from this area that you have as capitulation, it's almost like we're getting lucky and we should like pray to the gods, because there is nothing technically that is telling us that this is where the bottom is going to be.
Yeah, look, you know, my latest modeling with the blockchain I was just saying is that, you know, where that capitulation is? If we zoom in, I think it's in the 2600 encapsulates that. And it's saying that that is the accumulation bottom, which means that if we're going to have this signature wick down, what's the next layer? Well, it's hyperwave territory, right? That's where the next volume profile support is.
So how did you get to 2600 right there? I mean, the number is good. It really rings true, but why 2600?
Because what you want to look at is essentially the volume going through the chain, which is MVT, and MVT, like we saw on that blue versus red.
So you're using your indicators to get there. Yeah.
Yeah. So we've always seen there's been a question is like, look, the volume going through the chain mirrors what happens on the market cap price, and it was a curiosity, and that's how MVT was created. Now I can show you on equations why these two have to relate to each other, right? Fundamentally, these two have to relate because of the equations. Now, wherever the market cap deviates from MVT, or sorry, the volume going through the chain, it comes back to it. And so what I'm doing is I'm modeling what is the price based on that volume. And it's really interesting because you can take, you're going to take a reading of the volume. You can take the reading today, which is volatile as anything, or you can take the reading of the last 20 days, 90 days, 200 days, 300 days, and they all give you a different reading on the price because it's laggy. And what you end up with is that eventually all of these lines based on previous moving averages start to agree, and they agree before the price, the market cap price, the price of Bitcoin hits it, and it predicts accumulation bottom.
Can I put in some extra yeast? I think that Tyler is correct. I think that Tone is correct. I think that you are correct. We're going to hit somewhere between 1,000 and 2,500. My personal target, based on 90% correction, is 2,500. I'm not religious or sort of set on that. That's fine. If it goes to 1,000, I will say Tyler's analysis is now unfolding. If it goes to 995, I'll say, well, Tone was right. If it goes to 2,600 and doesn't hit my 2,500 woo, I'll say you're right. My only contention here is time. It cannot hit the low that we all expect. It cannot hit it now for two reasons. Number one, we got the 200-week moving average in the way. That's one thing. The second thing is, if we look at the period over which corrections last, right? And when I say period, I don't mean like days or whatever. Markets unfold according to Fibonacci ratios, both in terms of distance and time. If we look at the period of the last rally and how long its corrections should last compared to every other previous rally and how long their corrections lasted, we got September 2019 as the end. I do not know why, I do not see why this correction should be faster than any previous correction in the history of Bitcoin. It could be, but I don't see the probability being high.
I can make an argument that this correction can take longer than the previous ones because there's more people involved now than there were in the last correction.
Exactly, I agree. I agree. We should expect it to be longer than the last one because the C is bigger.
It's bigger. So the implication then is if we are not going to our 2,000, 1,000 range now, and I think that's pretty unanimous across the ecosystem now. I mean, even Arthur Dam Hayes is calling it 2,500. If it's not going there now, if it cannot go there now, if there's more time that's got to unfold, what do we expect in the meantime? Because we got 6 months to waste, right? Yeah,
I think you're on point. I'm thinking that we get this bounce. That's what's happening. I don't know what the top is. You guys think 5,000? I'm not sure yet, but I think one of the things is that we'll probably have the second plateau of sideways. If it's anything like 2014, we've just had the next rung down, and we need the equivalent of the 350. It was in $350 more or less, very volatile before it consolidated properly, but it was for 2.5 months. It stayed at 350. Then we went to 150, capitulated, and then 250 bottom. And so we've just wished if this plays out the same as before, the equivalent of 350 is kind of like the sideways movement, and where we are now, we may have 2-3 months if it reflects exactly what happened last time. And and I guess it's the same people involved, it's the same psychology. There's a whole bunch of hedge funds now, and they're making these charts much more robotic. But there's good argument to say that we'll copy this and the time frame stretch a little bit longer. I said second quarter of 2019 would be the end of the bear. I'm like, sure, it could go to the third quarter right now.
I'm with you that this is one scenario that we go to a bottom end of the year. I'm also with Tone in that, and Tone is a closet Elliott wave tician. He doesn't know it. He's saying it could go double, right? Because we've had 5 waves. If you look at the charts, your charts, Will, we've had 5 waves of advance from the beginning of Bitcoin to this 2017 top, meaning that now, according to Elliott Wave, we've got to complete a correction of all of that, not just the last rally, but everything since the beginning. That's not catastrophic, because even from 6 cents or from 0 cents to 20,000, a 90% correction is 2,000, right? And Bitcoin's always made 90% correction.
The Elliott wave from year 0.
From year 0 to now, 5 waves is called a primary wave unfoldment. It's got to now do a primary bear market, which will last a Fibonacci 1.618 of that, puts us in 2022 for the bottom. That I don't want, but that's what Elliott Wave says. Yeah.
All right, guys, we have to wrap this up. I know we're getting into the whole price discussion, which is what everybody comes to this channel for. We might have to do it again, and if we do it more often, we'll spend less time on the general macro stuff.
Our goal here is to get Tone to fall asleep on the couch like last time.
Well, no, I'm not falling asleep because it's the afternoon for us.
Yeah, true.
Grab some lunch. You guys might be, should probably go to sleep. Okay, here's how we're going to wrap it up. Leah sent like 5 questions. In 3 sentences or less, we're going to answer them, or you can say just skip it. Very, very, very quickly.
Sure.
Here we go. Tone, if we go to 1,000, would a V-shape recovery be the best hope for the alts? No, like there shouldn't be any hope for the alts. The fact that you wrote hope for the alts is the problem. If so, would the exchanges protect 1,000 with all the dry powder? No, the exchanges don't have the power to protect anything. The exchanges would disappear. If the exchanges had the power to protect price, Mt. Gox would still be with us. Like people put too much stock into manipulation can last forever in a free market. It can't. Those are my very quick answers. Anybody else want to comment, or next one very, very quickly?
No, you said it. You said it.
Right. Next one. Which way will Bitcoin go if we hit a global recession? I don't know. No one really knows. It really depends on the type of recession and how deep it is. It's impossible to predict. Anybody else want to tackle it in 3 sentences?
I agree with that. There are minor recessions and major recessions, minor bear markets at 20%, major bear markets at 80%, like the NASDAQ. It depends on how it all plays out here over the next year.
I'll throw one quick thing in. A bank run in France, and only France, is amazing for Bitcoin. The entire European Union shutting down all of the banks at once is a disaster for Bitcoin, because then nobody has money to buy Bitcoin. But if it's just one country in Europe, then all the neighboring countries, all their citizens are going to run out and buy Bitcoin.
Exactly.
I'll just say, like, 2008 is an interesting model to go by. Like, you'd think that there's systemic issues with the banking and the fabric of our money. So the thing that is most endangered is fiat. What happened in 2008 was fiat rose crazy.
And gold fell, and gold fell 33%. Always remember that.
Remember why that happened, right? It's like everybody runs to USD to unwind their leverage positions. Everyone does this flight of safety. And so US dollar was the safety. And so I think
people store, Will, as you're saying, people store value for emergencies. So when the emergency come, they come out of that store of value, right?
And well, there was very specific events that were like, we need to get into cash now, right? We got to deleverage. If you've got a whole bunch of gold and you've got a whole leverage positions, you got to exit those leverage positions and you need cash now, right? And so everything sold down for cash and it was called deleveraging. And then
next question, guys.
Oh yeah, it's a bit long, right?
But I think
let me finish. It's like spike down, bull run up.
Yes, true. All right, next question. Does the bear market and stock market correlate with crypto markets in any way? As you can see, we're back to a bull run in stocks. We'll see how long that lasts. However, I don't believe that the stock market and Bitcoin correlation is tradable. It may or may not exist, but it is not tradable at this point in history of Bitcoin.
It's not strong enough yet.
Yeah,
that's because the macro investors are not in there at full scale.
Agreed. Does Tyler's base of 1,000 Bitcoin call on a macro, on a micro, or a macro financial level? I say it's neither. It's straight technical. Does he consider geopolitical events? I'm going to say no. Tyler?
No, the target has nothing to do with economics at all, macro or micro or political or anything like that. It's simply a technical target using one tool, which is a hyperwave.
And
Can I add to it quickly in 3 sentences or less? If the bear market low is at 1,000 or 2,000, it doesn't matter which of those two you buy at, because the subsequent bull market will go to 50,000 or 100,000. So it's 6 and half a dozen,
Okay, one more. Does the strength or weakness of the US dollar matter to Bitcoin? I'm going to say absolutely not, because Bitcoin is so illiquid and so speculative. And that's what drives like 98% of all the value of Bitcoin is speculation in an illiquid asset, that whether the dollar goes up or down as much as 50% is not going to make that much of a difference.
I agree with that. I think that they are uncorrelated at this point. I believe they will become very correlated at some point in the future. And the article I'm writing for Medium is predicting $100 million Bitcoin as one of the solutions to the world debt problem. But I am not predicting that will be the solution chosen.
And
okay, what I can add to that is, can I quickly add a thought? 3 sentences or less. If all of these crypto monkeys and zero hedgers who are calling for dollar deflation and collapse, if they get their way and the dollar goes to zero, then what will be the value of BTC/US dollar? I don't think they think about that. So I think there is some important. Yeah. I think we're never going to see dollar deflation in our lifetime, right?
What?
So, basically. So it's not a concern, but it's a theoretical concern.
No way, we might see it in our lifetime. I just don't think we're going to see it in the next 5 to 10 years.
Sure. Agree.
I'll just throw a more quantitative example in there. Let's use a realistic number. Let's say over the next year, the dollar moves 25%. It doesn't matter if it increases in value 25% or decreases in value 20%, right? What I would say is that will probably have a 60 to 70% influence on the price of gold. So you can probably attribute like 60 or 70% of the gold price to move the opposite direction of the dollar, and the other 40% of the price of gold, sorry, not Bitcoin, gold. The other 40% of the price of gold is speculation, and like 60% is correlated inversely with the US dollar. To the dollar. For Bitcoin, I'd say that's maybe 2%. Maybe it'll affect Bitcoin 2%.
As little as that.
98 speculation.
Right. Fair enough.
Yeah, I wouldn't disagree with that.
Okay. Almost done. What do you, they're calling us experts, I don't know about that. What do you experts believe the effect of the over-leveraged long positions would be, shorts or long, close to the all-time high? I think this is way too theoretical of a question. I don't want to really address it. Are altcoins the fractional reserve of Bitcoin? Yeah, I think that's a good analogy.
Yeah, I do too.
A fractional reserve of Bitcoin, it's inflation of Bitcoin. Is that?
Oh yeah, but it's also a fractional reserve because they're like complete like leverage made up out of thin air of what they think is a blockchain.
Yeah.
At what point does Stone throw the hope of $5,000 out the window? Probably if Bitcoin goes below 3,500. Then my $5,000 hope is gone. And
if Bitcoin goes below 3,500, then you've got a MA sell signal. Yeah, you'd be right to make that call.
Right. So that one is it. And finally, Willie, this one's for you, and feel free to comment quickly on anything we've said so far. The lag of your someone is asking for the lag of your volatility line.
It's 60-day volatility is.
And on your NVT, you have a few days delay.
It's subject to blockchain.com's data. It's somewhere between 12 hours and 24 hours delay. But these are daily candles.
Got it. All right, guys. I think we covered it all. I want to let you go. There's been like a million questions. We had over 1,500 people most of the stream. Thank you guys again for coming on. I'm gonna say one last thing and then I'll let you say your goodbyes and tell people how to find you. I have like a million links in the video description. So definitely check all of our prior videos are in the video descriptions as well. I should probably add the ones with me and Tyler, though there's too many of those. I just wanna jump back here, quickly mention I will be speaking at a meetup in Phoenix this Saturday. The Unconfiscatable conference in Vegas. Sorry you can't make it, Willie. Next time, the Unconfiscatable conference with the poker game. Please check out that website. Once again, Venzen, thank you for joining us. And your trade.cryptocurrency.net website. Go ahead and tell people how to find you. But it's just this website these days. And anything else you want to add on your closing statement?
Tone, thanks for having me. This is where people can subscribe to conversation and mentorship from me. Find me on Twitter, but I'm not very active there. I like to keep quiet and do my thing with a few subscribers. Tone, look forward to you coming to Thailand. Willie, I don't know if you can make it. You guys work that out. And look forward to seeing you again near the year end. Oh yeah, Willie, since you're on, I'll be back in Thailand in February. Venzen's gonna try to meet up with me, so if you're around, that would be great. Cool. For coming on.
Yeah.
We can either meet in Bangkok or Koh Samui.
Koh Samui is my pick. It's lovely.
That sounds good. We'll work it out.
Tyler, join us soon, please.
Yeah.
I would love to, guys. It's always fascinating talking with you.
All right. And Willie, I have your Twitter somewhere here. That was Murad's. So I have your Twitter as well and your website.
Yeah, so follow Murad. Must stop Murad. he's a smart mind, but no, sorry. But I mean that Woobull.com. I don't actually blog a lot, so a lot of my work is on Twitter. I post there. I like to microblog. Some of the stuff ends up on Woobull, but not often. So yeah, it's mainly Twitter. You can go to the chats, which Tone's been all over, chats.woobull.com. I just keep putting up new chats and tweaking that stuff. And yeah, there's a little Bitcoin tip thing. You can join Binance, but that's about it. I do this stuff for fun. Yeah.
All right, very cool. Hey, thank you guys for spending all this time with us. It was a very long podcast. Thank you for everybody that's been watching. No more podcasts the rest of the day. It's been enough. But we'll see what happens. We'll see what happens the rest of the week, and enjoy it, because I think the week leading up to Unconfiscatable, I might be a little too busy. You guys know how it is. We all procrastinate and then we cram. Nothing changes.
Good luck with it. Good luck with it. Yeah.
Thanks, guys. Thank you for joining, and thank Tyler. Thanks again.
Absolutely.
Tyler, Lucid. We have Lucid Funds. I'm just gonna go through. I already stopped screen share, but Tyler, say a few words on the closing.
Yeah, we've got a new website at lucidinvestmentstrategies.com, and on there you can see all of our vlogs, 125 of them. You can see all of the tweets that we do, but you can also see all of our webinars and our workshops coming up. And this has been great. Thank you all very much.
All right. Thank you. And you can find Tyler on Twitter as well.
Sure.
All right, everyone.
Night,
thank you for watching. I'm going to stop the screen share and see you all on the next one.